Well, good morning. I am David Fort. I serve as Senior Policy Advisor for Property and Casualty here at the Office of the Insurance Commissioner. We start today's workshop with a land acknowledgement. We are meeting virtually from Olympia and Tumwater on the traditional territories of the Coast Salish people, specifically the Nisqually and Squaxin Island peoples. Olympia and the South Puget Sound region are covered by the Treaty of Medicine Creek, signed under duress by the Coast Salish people in 1854. The OIC and Washington state employees respect these lands and tribal sovereignty. We acknowledge the tribal governments and the Coast Salish people living on and taking care of these lands. Thank you to everyone joining us today for a workshop relating to our P&C claims environment. Now I'd like to introduce and welcome Insurance Commissioner Mike Kreidler.
Good morning. Thank you, David, and all of you for participating in this important discussion. First, I believe the insurance industry is always looking, and appropriately, for ways to improve the efficiency and accuracy of their claims process. And when the process works, most consumers are made whole. I believe we have some serious issues right now. We've seen a 63% jump in complaints about claims issues. On average, we used to see and get about 280 complaints a month, and now it's jumped to 450. Most of these involve auto insurance, but we've also been hearing about some homeowner issues too. I know supply chain issues have caused some repair delays, but I'm especially concerned with the increase in for consumers with complaints about the claims experience that do not involve supply chain problems. Some of the most concerning issues we're hearing involve the issue of the use of photo estimating that can produce very low repair estimates. Actual human adjusters not inspecting the damage, insurers not thoroughly explaining why they disagree with a consumer's repair estimates. I've called this meeting to hear from all of you. I hope to learn what steps our agency and the state legislature can take to improve the claims environment for consumers. And now back to you, David, so we can hear from the consumers and others. Thank you.
Thank you, Commissioner. The OIC report showing an increase in property and casualty consumer complaints was linked in the notice of this public workshop. It's also available at the OIC website at insurance.wa.gov. Following up on the Commissioner's purpose of this public workshop to bring people together to discuss what is going on in the claims environment, we asked multiple insurance company vendors that develop and utilize photo software and artificial intelligence to create repair estimates to participate today. All of them were non-responsive to our requests. Regardless of that disappointment, we hope to have valuable discussions that can benefit the Commissioner and our legislators as they consider ways to help consumers with their claim disputes. A quick primer on some confusing definitions folks may hear today. A staff adjuster is an employee of the insurance company. An independent adjuster is hired by the insurance company and represents the interest of the insurance company. A public adjuster is hired by the insured for a fee to represent the insured's financial interest during the claims process. An insurance appraiser and umpire are individuals identified within an insurance policy that, when invoked under an appraisal clause, determine the amount of loss. Now, specific to the auto repair industry, often someone that estimates the value of a vehicle or cost to repair is sometimes called a motor vehicle appraiser. This is not the same as an insurance appraiser operating under an insurance policy's appraisal clause. So we kindly request anyone speaking about someone who is estimating the value or damage of a motor vehicle to simply call them estimators when not speaking about an insurance appraiser. After listening to our national and regional experts provide their thoughts, we will open the workshop to any participant wanting to provide comments. We ask all participants to not name any individual insurance company. We're interested in your personal experiences, and we want to avoid this becoming an event to air grievances against any one company. We will hold the workshop open until all participants that are wanting to provide comment have had the opportunity to do so. We are also accepting written comments through August 15th at the email address of policy@oic.wa.gov. And with that, I'd like to introduce our first speakers from associations and trade groups that represent the insurance industry. Kenton Brine, President, Northwest Insurance Council, and Mark Sexton, Vice President, American Property Casualty Insurance Association, and Christian Rataj, Regional Vice President, the National Association of Mutual Insurance Companies. Gentlemen.
Thank you, David. Thank you, Commissioner Kreidler, and welcome participants in today's meeting. Thank you for your interest in this set of very important issues. My name is Kenton Brine. I serve as president of the Northwest Insurance Council. I'd like to just begin by formally thanking the Insurance Department for the work that you do on behalf of consumers in Washington. And I'd like to talk a little bit about the Northwest Insurance Council, our role in the industry, and then talk a bit about some of the issues that we see facing consumers, insurers, and auto repairers, et cetera, in today's climate. So the mission of the Northwest Insurance Council is somewhat unique in our industry. Our primary mission is to provide information about auto, home, and business insurance to consumers through the media and through direct outreach. We do this with a specific purpose in mind: to help inform and educate consumers about the availability of insurance products and services and about the claims process. Our hope is that with this information, consumers can make smart, informed choices about the type and amount of insurance they need to protect their financial well-being, and that they know what to expect from their insurer if or when they file a claim. In this respect, the Northwest Insurance Council and our insurance company members are aligned with the interests of the Office of the Insurance Commissioner. We want the same result from our work: informed consumers making the best choices about managing risk, and insurers acting responsibly in the claims process. Statistics overall suggest that nearly all of the time, that is what is occurring in Washington's insurance market today. As noted by Commissioner Kreidler in announcing today's forum, most of the time, the claims process works as intended. In fact, companies we've heard from have indicated that the percentage of claims they process each year that result in a complaint to the OIC, and we're talking about thousands, tens of thousands, or even hundreds of thousands of claims annually filed and processed by insurers, filed with and processed by insurers, depending on their size in Washington's insurance market, is typically less than 1% year after year. In some cases, and for many individual companies, the percentage is even lower than 1/2 or even 1/10 of 1%. One company reported that just 1/100th of 1% of their processed claims resulted in a consumer complaint to the Office of the Insurance Commissioner. That said, here's the problem. Insurers strive to provide their best service to claimants, often at times when claimants are suffering the worst moments of their lives. The people who work in claims for insurance companies are caring, dedicated individuals, and as I've noted, and the data bears out, nearly all the time, the claim process works as intended. But regardless of having a low percentage of claims that result in complaints to the OIC, and having an overall claim satisfaction score of 871 out of 1,000 from auto insurance consumers, as measured by J.D. Power and Associates in 2022, insurers are keenly aware that those numbers mean nothing to an insured claimant whose auto repair is taking longer than they expected, or who has not had a timely response to their email or a call from their claims adjuster. As such, the OIC's report is concerning to companies that strive to provide good service to their policyholders. As my colleagues will point out in their remarks today, insurers and consumers are facing similar challenges in the post-pandemic economy. Here are some examples of the challenges that we're talking about. The number of claims is rising dramatically for many insurers, particularly on the auto side. As an example, one company reported a 44% increase in filed auto claims between 2020 and 2022. Serious injury-involved crashes are up in Washington, so is auto theft and catalytic converter theft. In just a single day, yesterday, there were 3 major auto collisions in the Puget Sound region in which 6 people were killed, 7 or more were injured, some critically, and a car ended up in Puget Sound off Alki Beach in Seattle. Costs are rising and repairs are taking longer to complete. One Enwick member company reported that between 2020 and 2022, average labor hours per auto repair increased nearly 4%. In the same period, the average number of parts necessary to complete a repair increased more than 13%. The cost per part increased 19%, and the average cost per auto repair overall rose nearly 22%. In an effort to provide greater convenience and speed up the claims filing process, many insurers have turned to the use of estimating apps that allow the claimant to take and submit photos of auto damage and file their claims online. But as noted in the OIC report, estimating apps are new and may have limited ability to accurately estimate needed repairs because the photos submitted by claimants may not reveal the full extent of damage. A photo showing front bumper damage may not reveal frame damage, for example, or damage to sensors or cameras embedded in the vehicle. This is contributing to situations where the final settlement is far higher than the originally submitted estimate. Insurers are still required to pay up to policy limits for repairs to return the vehicle to pre-crash condition. But that disparity between an initial estimate and final repair cost and the process necessary to complete the repair and settle the claim is in some cases made more complicated than it was 2 or 3 years ago. The dramatic jump in auto crashes and claims, coupled with well-documented supply chain and labor market issues, are, we believe, at the center of the struggles faced by insurers, auto repair professionals, and especially consumers. And this isn't just happening in Washington. The J.D. Power survey I noted earlier, released in 2022, noted that across the country, the average auto repair took 17.8 days to complete, an increase of nearly 3 days over the previous year. In 2019, it was 10 days. Anecdotally, we're hearing from insurers that their claimants are literally waiting weeks or months to get their vehicles into a shop for repair, as shops are at capacity here and in many parts of the country. But it should also be noted that for many or most insurers we have heard from, despite these challenges, the percentage of processed claims that result in a complaint to the Office of the Insurance Commissioner has not changed over the past 2 years. For many companies, the number of claims and the number of complaints have risen at the same rate. It's also interesting to note that from the OIC's report, looking at the reason codes reported by the OIC, the highest increases in consumer complaints related to auto claims were for claims delays, vehicle repairs, and adjuster handling, all of which may be at least to a degree attributable to issues stemming from the supply chain and labor shortages we have all become familiar with. In contrast, unsatisfactory settlements or offers and claims denials, while still among the top concerns of consumers who contact the OIC, have not been increasing. The bottom line is that we're in a challenging time of change. Insurers want to be a part of the positive results that change can bring, like innovation that leads to greater consumer convenience, safer vehicles, more products at reasonable prices for home and auto consumers, and satisfaction among consumers with the claims, repair, and financial recovery process. I started my remarks today by saying that we're aligned with the OIC in our shared interest in protecting and serving Washington insurance consumers. I'll conclude my remarks by saying my industry colleagues and I are here today to hear more about the problems consumers are facing with insurance claims. And we hope that today's forum not only highlights problems, but also points out where things are going right and what insurers can do to improve service to their customers. I thank you for your time, the ability to speak with you all today. I look forward to hearing remarks from others and from the folks who've joined us from the public. Thanks very much.
Good morning. My name is Mark Seckman with the American Property Casualty Insurance Association. I would like to thank the Commissioner and his staff for hosting this workshop on the increase in complaints the Office of the Insurance Commissioner is seeing involving auto and homeowners claims. Anytime we see a spike in complaints, it's important to look at the issue and make sure we understand what is driving the increase. I don't need to tell anyone here that the last few years have been challenging. The pandemic changed everything and has resulted in some permanent changes to the way we do things. Many of the changes we discovered during the pandemic, like supply chain issues and worker shortages, continue to be an issue for insurers, the repair providers, and consumers today. It is important to state at the beginning that insurers do not benefit from delays in getting their customers' cars repaired. It is in the best interest of the insurance company to ensure that their customers receive a quality repair as promptly as possible. The fact is, a consumer may only use that repair facility or home repair contractor once, but they'll be reminded of that experience every time they pay their insurance premium. Unlike a fine red wine, claims do not get better with age, so there's no incentive at all for insurers to delay vehicles being repaired. It is also important to put the increase in complaints in the proper context. For example, the percentage of complaints filed compared with the number of automobiles insured in Washington is just over 0.5%. For homes, the complaint ratio is even lower at 0.055%. This is only one way to look at the issue. The most current industry claim data comes from the Fast Track reports, which shows that third-party property damage, collision, and comprehensive claims increased by 15% from 2021 to 2022. Claims for 2023 are likely to be even higher due to more accidents caused by a variety of factors, including higher speeds. As I mentioned, insurers are keenly aware of the challenges body shops and the economy in general have had with supply chain issues and acute labor shortage, all of which results in delays in cars and home repair, which often leads to consumer frustration. When APCI asked members what they are seeing, they pointed out that supply chain issues and repair technician shortages are affecting the industry all over the country right now. APCIA members report that Washington has struggled more with these issues than other Western states, and shop backlogs are higher here than most other Western states except for Colorado. Many of this may be the result of body shops facing a struggling economy or starting to shut down in states including Washington. APCI members who provide insurance for the repair industry report they are seeing claims against repair shops for negligence with supply chain issues, often preventing case resolution. In a current case, a member company is handling a claim involving the sale of a used Ford truck and allegedly faulty repairs of the said truck. The engine is still under Ford warranty. However, extreme supply shortages prevent timely engine replacement. Therefore, the loss of use claim appreciably increases. Thus, auto repairs were delayed and the costs increased. There seems to be a heightened scrutiny of virtual estimating tools and other forms of technology that are used to speed up the inspection process. Some blame the increasing use of these tools for the increase in supplements. However, it must be remembered that an estimate is just that, an estimate of the cost to repair based on what the estimator can see at the time of the inspection. No estimator, whether the inspection is done using video or photos or in person, is going to be able to detect hidden damage that can only be found when the vehicle is disassembled or torn down prior to repair. If the question is, has the amount of the total payment captured on the initial estimate compared to being captured on various supplements over the past several years changed? The answer is most likely yes. One member company said that the percentage of partial loss claims payment captured on an original estimate was about 75% 3 years ago, but now that number is closer to 60. This is not due to increased use of photo estimating. Rather, it is driven by an increase in the complexity of vehicle repairs. The increasing prevalence of advanced technology in vehicles, which can't keep them out of accidents, also makes them more complex and costly to repair. A minor bumper incident in 2018 might have required an hour or two of labor and some paint. In 2023, that bumper may have to be replaced due to a motor or a sensor under the cover that does not allow the plastic cover to repair it in order to function properly. This can cause the severity of the claim to go from $500 to $2,000, which we did not know until the cover is off the vehicle. This is perhaps the easiest example to explain the change in complexity, because this is the most common loss they see. In general, because length of time to repair is elevated and complexity of repair is higher, the industry is seeing more adjustments to the initial estimate, called the supplement, than pre-pandemic levels. This leads to additional work for both the shop and for the insurance company to arrive at the final claim amount. Thank you for allowing me the opportunity to provide a few quick comments. APCIA looks forward to working with the OIC and other interested stakeholders in continuing our efforts to deliver quality repairs and repair experiences on a timely basis to our shared consumers. Thank you.
Hello, this is Christian Ratai of NAMIC. Can you hear me?
Sure can, Christian. Please go ahead.
Thank you. My video camera isn't working, so you have the benefit of not seeing me today. As the FCC once said, I have a face for audio, not video. NAMIC is the largest property casualty insurance trade association in the country with more than 1,400 member companies, representing 40% of the total national market. NAMIC member companies serve more than 170 million policyholders nationally. For the record, NAMIC agrees with the well-stated comments of NWIC and APCIA, and I will avoid repeating their thoughtful commentary. NAMIC appreciates and shares the OIC's laudable desire to evaluate the needs and satisfaction level of policyholders. We must keep in mind that insurers compete in the marketplace, not just on price, but also on customer-friendly experience insurers endeavor to provide, and on policyholder satisfaction. So we agree with the OIC that this is an important issue. Unfortunately, the conclusions and inferences of the OIC in their report and media statement are misplaced, methodologically unfounded, and unsubstantiated by the data sets. NAMIC is concerned about the methodology used by the OIC and the conclusions made by the OIC based upon a limited data set comparison. As we all know, a study is only as good as the questions posed and the relevance and reliability of the data sets evaluated. NAMIC has 5 major methodological concerns and questions with the OIC's report. First, NAMIC is concerned that the methodological approach used by the OIC is fundamentally flawed. Specifically, where is the comparison of the increase in consumer complaints received by the OIC compared to the increase in consumer claims submitted to carriers? As Mr. Bryan had mentioned, claims filing has gone way up. The law of mathematical probability, which suggests that an increase in the number of insurance claims filed should naturally lead to an increase in consumer complaints. Why hasn't the OIC evaluated the historic percentage of consumer complaints submitted as compared to insurance claims filed? How can the OIC conclusively assert that there's a claims adjusting and settlement problem when this key information has not been addressed at all? NAMIC's members believe that this percentage of consumer complaints submitted compared to insurance claims filed is relatively static. We are talking about a very small historic trend change, a fractional percentage point change for consumer complaints, as both of my colleagues had mentioned. How is this significant as an increase? Mathematically, it isn't a significant increase. Second, NAMIC is concerned that the OIC has not factored into their analysis the increase in state population growth from 7 to 8 million people during this data set timeframe. One would naturally and reasonably expect that as the population increases and resources, especially auto body repair shops, are now challenged, this number would increase as to consumer complaints. This is pretty logical as a supposition. Why wasn't it considered and addressed in the report? Third, even if we accept the OIC's limited data set study, why is this increase considered dramatic by the OIC? Did the OIC take into consideration all of the consumer complaints directly generated by the OIC's unlawful temporary ban on the use of credit-based insurance scoring? There was a significant number of consumers who expressed strong concerns about the impact of the OIC's regulation. Now, I appreciate that these are not claims-related complaints, but it is still a consumer statement of dissatisfaction with the insurance industry, insurers, and the OIC. How did the OIC address this variable in their methodology? It did impact complaints. A consumer that had an insurance product rate increase as a result of the OIC's credit-based insurance scoring regulation is arguably more likely to be unhappy with the insurer. So if they also filed an insurance claim, it is reasonable to suspect that they were more likely to submit a complaint about the claims experience to the OIC. This wasn't addressed in the study by the OIC. Fourth, NAMIC is concerned that the OIC believes that suspected violations versus non-violations is the key variable category for consideration, and that data set conclusions may be determined from this comparison. We are concerned about this metric for a number of reasons. First, what is meant by a suspected violation? How is it defined? Suspected violations based upon what evaluative standard? Two, this is merely a data set founded upon informal opinions of OIC examiners. It is not objectively verifiable and measurable. What is the identified regulatory standard of review being used by the OIC? What standard protocols were being used by the OIC to make sure all examiners were evaluating claim situations and complaints the same way? Three, what variables were considered by the OIC in determining what is a suspected violation? Four, actual violations of the insuring agreement or insurance code are the key, not suspected violations. Suspected is just way too nebulous and arbitrary a metric. A consumer complaint absent a regulatory determination that an insurer violated the insuring agreement or insurance code is merely just a statement of the policyholder's feelings about the claims experience. Although this consumer sentiment of their feelings, although this consumer statement of their feelings is very important to insurers, and especially their customer retention objectives, it is not a clear statement that there is an actual problem that supports a conclusion that there's insurer misconduct. For the sake of argument, if I complain to my doctor about a different health issue 3 times one year and then 5 times the next year, that in and of itself is not proof that my health is worse the second year. It just means that I've expressed my complaint more this second year. The key is the comparison of the health complaint to the medical test result of the complaint. So the year with 3 different medical complaints could actually be a worse health year for me if all 3 of those complaints were connected to a bad medical test result. And conversely, the year with 5 medical complaints could be a healthier year if only one of the health complaints is tied to an actual bad medical test result. This is why comparing the consumer complaint to actual violations of the insuring agreement or insurance code is the key consideration. But the OIC only considered suspected violations in their data set. My 5th major methodological concern relates to the fact that the OIC believes that the data set of quote unquote rolling complaint load by month is relevant to the issue of measuring whether there is a meaningful increase in consumer complaints. The only thing you can learn from a rolling complaint load from month to month is the fact that the OIC is taking longer to address consumer complaints, hence a larger rollover of complaints from one month to the next. In addition to these methodological concerns, NAMIC has some conceptual concerns with the premise that an increase in consumer complaints equals an increase in insurer misconduct. In the study of formal logic, there is a number of articulated logical fallacies. One of them is the fallacy of causality, which is most acute in situations like this one, when a single causation is posited for a complex and interactive multivariate causation situation. There are many external variables that influence or contributorily cause a consumer to be dissatisfied with their auto insurance claim and auto repair experience. This wasn't addressed by the department. Just being involved in an auto accident and needing to have one's car repaired or replaced is a major life stressor. Even if every aspect of the claims experience and every aspect of the auto repair goes well, it is still a terrible life experience. Now add the post-pandemic stress in the world people are struggling with. The Mayo Clinic coined this phenomenon as being pangry. That's how common it is. A quick internet search on this issue of consumer complaints leads to a lot of data and recent studies on the general malaise and dissatisfaction people are experiencing in this post-pandemic, politically divisive and inflationary time. General consumer sentiment has to be considered when looking at specific consumer complaint trends. Here are just a few examples. According to the Wall Street Journal, March 14th, 2023, out of 1,000 consumers surveyed, 74% of the consumers reported experiencing an issue with a product or service, basically a 74% consumer dissatisfaction level. The CFPB, which is the Consumer Financial Protection Bureau, saw a 54% increase in consumer complaints handled in 2019. The ACSI, which is the American Customer Satisfaction Index, has seen a drop in general consumer satisfaction from 2018 to 2023 of 77% down to 73.6%. Even the auto repair industry has experienced an uptick in consumer dissatisfaction. The USA Today, March 9th, 2023, had a story where the headline read, "Servicing your car is more of a hassle than ever. Survey shows falling satisfaction." According to Upswell Market Company, most Americans are unsatisfied with their current auto repair shop experience, March 2021. Finally, JD Powers found this year that overall customer service satisfaction with auto repair services experience is down 2%. First year over year decline in 28 years. Now, this is not to be critical of auto repair shops or anyone. I think, as I said, there's a general dissatisfaction pedigree, and that has to be factored in here and considered when looking at what a consumer complaint really states, what it really means, what it really shows. Additionally, as my trade colleagues just pointed out in detail, there are a multitude of external variables insurers can't control that impact the processing of claims and consumer sentiment about the insurance claims experience, from auto repair scheduling delays, unavailability of auto repair parts, auto repair staffing limitations that create delays in completion of the project, and significant auto repair cost increases. You heard some very good data from Mr. Bryan and Mr. Sexton about that. All of these things impact the consumer's auto repair experience, and one cannot discount the impact of this negative auto repair experience and what it has on the consumer's feelings about overall insurance claims process. Once again, not blaming anyone, just explaining that things have to be put in context, especially in today's world. The OIC has failed to formally evaluate the impact these external consumer dissatisfaction pressures have had on consumer complaints. Therefore, how can the OIC say that consumer complaints are an appropriate and reliable proxy for measuring claims adjusting and settlement practices? Although we appreciate the importance of this regulatory project, we are concerned about any potentially new regulatory requirement for insurers. Requirements become insurance rate cost drivers, and increased costs lead to generalized consumer dissatisfaction with insurers and ultimately their claims experience. New regulatory requirements force insurers to reallocate staff time and resources that could be used for claims adjusting and customer relations activities. One need only look at the recently adopted premium change transparency consumer notice regulation, which NAMIC testified a number of times against as a serious insurance rate cost driver, staffing workload burden, and consumer confusion creator, to see my concern. Consumer confusion leads to consumer inquiries and complaints to the OIC. How does this not lead to consumer dissatisfaction, which is most easily expressed by the consumer during the insurance claims process? Now, as Mr. Bryan pointed out, most consumers are very happy, and that's because insurers strive to give them a good experience. It's how they compete. But we need to keep in mind all of these variables. During the hearing, NAMIC specifically testified about the adverse impact that regulation will have on insurance producers and their relationship with policyholders. The more time insurance producers, insurance companies spend addressing these questions, the less time they have to assist consumers in the claims process. The OIC needs to be mindful of the fact that their regulatory behavior ultimately impacts the insurance consumer's experience. They're being the OIC. Your conduct impacts the consumer. It impacts pricing of products. It impacts the consumer's claims experience, and it impacts their overall customer satisfaction. In closing, NAMIC recommends that the OIC resist leaping to any conclusions based upon this flawed statistical analysis, and that the OIC take a step back and look at some of the foundational issues NAMIC raised about the study during our testimony here. Thank you very much. I appreciate your time and your consideration of these comments. Since this will be my last time having an opportunity to talk with the OIC, since someone else will be taking over my region, I wanted to say thank you for always hosting workshops where you listen to our concerns. Even though we may not always agree, it's nice that you provide this forum and that you do genuinely listen to us. Thank you very much.
Thank you, Kenton, Mark, and Christian. I just let folks know that we're going to hold the workshop open as long as people want to provide comments. We're a little bit behind schedule, and we asked the remaining expert presenters if they could hold on to their time allotment, and we'll try not to go over with anybody else. Next, we have the Society of Collision Repair Specialists and their Executive Director, Aaron Schollenberg, available to provide their perspectives.
David, thank you so much for having us. I sincerely appreciate the opportunity, and thank you as well to Commissioner Kreidler. My name is Aaron Schollenberg. I'm the Executive Director of the Society of Collision Repair Specialists. We're a national association. We're charged with serving the collision repair professionals across the United States. And our role is to be a source of information, education, and a voice of advocacy for collision repair businesses. We have a bit of an unusual scenario here, as you can see from the video, and I think it's probably important that I describe the setting for you. So we are a national association, and the individuals that you see here today around me are our board of directors. They own, operate, and support collision repair facilities and have gathered from more than a dozen states around the country for a meeting that we're holding today. Our organization has this quarterly board meeting, and in fact, we're currently in session, but we've taken a break from our own agenda because the conversation today is of significance to us because of the importance that it plays for our members. Not just members in Washington, but our members across the United States. The topics you're exploring today impact every collision repair professional and the consumers that they serve. So while I'll be the one addressing you today with the commentary, please know that my voice and the sentiments that I share are echoed by all of these individuals surrounding me, and it's intended to express the gravity of the situation based on the perspective of thousands of collision repair professionals who we have the privilege of representing. Our members, our industry, and most importantly, the consumers we serve, they're struggling. The claims process that was described today works, but it doesn't work as well as perceived. And I would caution that not every failure results in a complaint to the department. The reality is that there is a lot of challenge today with the complexity of performing safe and proper repairs that restore the increasing array of sophisticated technology found in modern day vehicles, while also being under extreme pressure from businesses that benefit when consumers are not made whole. Said differently, the entities that sell consumers peace of mind through the promise of indemnification currently benefit when consumers choose not to have their vehicle repaired. They benefit when consumers otherwise become responsible for costs that should have been covered under a loss. And they benefit when consumer protection mechanisms are either weak or absent, providing very little recourse for those policies that were supposed to protect them. We're all collectively witness to these activities all throughout the country, and they reflect what you've identified in your research and results of your report. There's not a business surrounding me in the room today that hasn't felt the pressure to perform a repair that would otherwise undercut what the consumer deserves. There's not a business here who isn't routinely asked to perform repairs in a manner that conflict with their professional expertise and their commitment to the vehicle owner. There also isn't a business sitting in this room with me today who hasn't had consumers address those shortcomings through policy protections, such as the appraisal clause. We understand this is a solution being considered in Washington and are here to voice our perspective on it. Now, we're not here to tell the OIC or the insurance industry how to operate. We're here to provide national level perspective on what we face in helping consumers receive proper repairs. And I think you'll hear examples at a local level from our colleagues in Washington on exactly what the membership in that area faces. You see, many car insurance policies include an appraisal clause that allows policyholders to have a third-party appraisal done when they don't agree with the carrier's valuation of the vehicle or their damages. Both the carrier and the policyholder hire an independent appraiser, and if the appraisers can't agree, an umpire is selected to make the final binding decision. When implemented, the businesses around this table can tell you that their customers have been victorious when an independent, non-biased third party has stepped in to evaluate repair and repair costs. Bill payers count on consumers not having or not invoking the resources to protect themselves, and the claims process is made difficult as a result. At the center of the conversations, your Property and Casualty Historic Trends Report, illustrating a significant and growing volume of complaints. This is of importance given the prominent role of the insurance claims complaints and how they comprise the data. Your officials have identified contributing factors, most notably the increasing distance between the initial settlement offers and final payments. That distance is growing, and it's why we're here. And why so many states have begun to take a closer look at appraisal rights within a policy as a means for consumer protection. In Texas, the Office of Public Insurance Counsel, or OPIC, has recommended to the state's legislature that the right to appraisal on insurance claims be a mandatory part of policies. This is a viable, non-litigious option that keeps from bogging down the court systems. OPIC says that without appraisal, consumers may be forced to choose between accepting the insurer's offer and paying out of pocket for any disputed amount, or taking on the costly and time-consuming burden of going to court while the repairs to their vehicle remain in limbo. The third and more frightening option is that the repair will either not be performed or will be performed incorrectly as a result of the claims pressure, potentially leading to safety concerns for the occupants and those on the roadway around them. Even the Consumer Federation of America has pointed out that eliminating the right to appraisal affects public safety. Appraisals serve as a check and balance of insurers in determining how much to pay for a repair to a vehicle. A non-litigious option is important for consumers because in most cases, consumers have difficulty finding adequate representation to pursue litigation against insurance companies, as there is not a meaningful business case for plaintiffs' attorneys to represent consumers for shortchanged amounts on a case-by-case basis. This is why the right to appraisal is critical, and I'm glad you're considering it. In their report, OPIC made note of disputes between insurers and repairers and consumers becoming more frequent and more contentious. And that's analogous to the experience being had by your department here in Washington. The reality is insurance department complaints are limited in what they can address for consumers. Actions are limited to patterns of practice and overarching behavior, not the amount of loss, not specific items that have been neglected. Appraisal options remedy that. They provide consumers the ability to address and resolve specific operations and specific amounts of the loss that are in question. This is a mechanism to address specific complaints surrounding the unsatisfactory settlement offers and claim denials, which comprise 2 of the top 3 reason codes cited in your insurance claims handling related complaints. The complication of vehicle technology designed to make the vehicle safer and championed by the insurance industry has added to the complexity and growing disparity between cheap settlements and highly complex repairs. But there's another technology that's already been discussed today, fueling that disparity. Claims technology has further exacerbated the issues as well, within the shop floors and within the consumer experience. I've joked often since COVID about how I never thought I would see the day where collision repair centers would pine over the days that they had insurance adjusters walking into their facilities. But it's not a joke, and they do wish for that more frequently because COVID presented an opportunity for insurance companies to shed the costs of supporting field claim teams to settle claims. They've leaned more into photo estimating, virtual estimating, and artificial intelligence solutions. As noted previously, unsatisfactory settlements offers remain one of the largest drivers of auto insurance complaints. There's an increasing reliance by insurance companies on photo and virtual app-based repair estimates. These estimates can and are significantly lower than expected, which drives confusion for the consumer and challenge for the collision repair center. It often increases costs through unnecessarily exaggerated lengths of repairs caused by delays through the process. These systems add redundancy into the claims process. It often feels as if it's intentional, as if it's a strategy to mitigate overall costs of repair. If we make it more difficult, perhaps they will accept a lower offer sooner. There is a distinct lack of experience in those we're interacting with in the virtual process. There's an absent knowledge of the market area and what goes on within it. There's an intentional lack of authority and a lack of continuity and a lack of understanding on the professionals on the other side of the virtual experience. This results in discrepancies that lead to redundant requests. We send in a supplement, we identify what's necessary, the person on the other end says they understand, and what we receive back does not reflect what we discussed. We're then forced to start the process again. We can blame many things potentially on supply chain issues, but I would contend that perhaps delays built into the claims process exasperate the supply chain issues. When the collision repair professional knows up front the parts that are necessary, the operations that are needed to perform that repair, can identify them in an initial or early document, and then has to go through multiple processes to gain approval. And by the time the approval is received, those parts are now on back order or unavailable, and the car sits and now needs to be scheduled back in. So the question is whether the delays are really supply chain or whether that's a convenient excuse for delays built into the claims process. It's important that I emphasize that denials don't just occur in the form of no or an objection. Denials are just as blatant when they come in the form of an omission. Missing information in a settlement is the same as a denial, especially when that information has been presented by the repair professional. SCRS has expressed concern on many occasions surrounding photo-based and virtual interactions. We have concern that I believe is shared by your insurance division over the complications that arise from massive reductions in the quality of settlements that result from photo-based and virtual appraisals. Technology companies who have the most to gain next to the bill payers will point to their own data to demonstrate efficiencies and success. But what we're experiencing in the field is the contrary. Consumers are generally unfamiliar with the damage evaluation process and what would represent a fair or comprehensive damage appraisal. This can leave a claimant with less than they are entitled to from the accident, especially if they choose not to repair their vehicle or do not consult with a professional repairer. Physical inspections also allow for consumers to be notified if the damage inhibits the safety of their vehicle. That advanced design and functionality requires even more trained expertise to capture the necessary repair operations and to validate that the consumer won't otherwise be at risk driving, especially with an increased reliance on vehicle systems. In fact, safety concerns led to the repeal of a photo appraisal in Massachusetts that only remained in effect for 14 months. In 2015, the Massachusetts Auto Damage Appraiser Licensing Board reversed their decision, which allowed licensed appraisers to use photos and videos instead of physical inspection during the estimating process. The 2015 decision was based on concerns that the process could result in inaccurate appraisals. Their conclusion mirrored ours. Consumers are best served by a process that protects them with a more thorough diagnosis of damage at the onset of the claim and the repair process. AI has the potential to be more intelligent, but it's not being designed in that manner. There's only one right way to repair a vehicle: utilizing OEM procedures, utilizing the data and tools and information available to perform in accordance with the engineering specifications. If a vehicle is equipped with safety systems, with safety technology, with ADAS, as they virtually all are today, those procedures play even greater roles. In insurance claim settlement, it is a common practice to only write what you can see, despite professionals being capable of identifying and effectively predicting damage that may not be visible. Often, it's based on a strong understanding of the procedures, of energy flow, how the vehicles are constructed, and of the necessary procedures. But AI is being designed to replicate the claims practice of only writing what you can see, rather than improving upon them and writing for what they know. The example was used of the bumper with the sensors behind it and not knowing that it would need to be replaced. But it could be known because there's a document that tells you that that bumper needs to be replaced if damaged. And there are options that are available for the vehicle that could be identified to know what systems are behind that bumper. We could very easily identify up front the need to perform those tasks, but we get in our own way and the AI is being designed in the same manner. There is no regard for the library of documented procedures. In fact, this is being designed to create the lowest, quickest estimate possible to start the process, not to identify what the consumer is owed. In fact, this week at the Collision Industry Conference, which occurs tomorrow, here where we're located, a key technology company who develops estimating resources for the collision and insurance industries will highlight a customer of theirs operating in the United States today. The presentation is specific to a conversation of redefining the difference between an estimate and a repair plan. This difference truly is the root of the increasing distance you are seeing between the initial settlement offer and the final payment. This company will be highlighted as it's been operating in the US for 2 years and has appraisers in 36 states and is being used by one of the top 5 carriers in the US. It's basically an Uber for estimators. From their website, it's a platform for auto repair damage assessments that makes it easy for gig economy workers to work independently on their own time. So basically, an estimator signs up, they have an app, the app tells them there's an available job, and they can either click start this job or I'm not available. They're provided 3 photos. They have an app, and the estimator must start within 45 seconds of accepting, and they have to submit the estimate within 60 minutes without addressing any hidden damage or procedures. The average estimate, as I understand it, is in the $1,400 range and submitted within 10 minutes, and there is no connection with or responsibility to the consumer. For their effort, they're paid $8 to produce this estimate and can start a new one as soon as they're finished. Clearly, the expectation here is to create a quick, basic document that gives a snapshot, not a thorough repair plan. That creates the distance, that creates the concern. These processes in combination with one another lead to unreasonable explanations. Your analysts have documented an increase in violations from failure to provide a reasonable explanation for offer of settlements. As I understand, these are the second most commonly cited violations on property and casualty complaints, and that is also not unique to the state of Washington. Routine denial or omission of necessary costs without justification is common. We don't pay for that is not a justifiable reason to deny a claim-related item. The Insurance Institute for Highway Safety has issued a report just this year on how crash avoidance features complicate repairs. Among those who reported that they had repairs on vehicles equipped with front crash prevention, blind spot detection, or rear view or other visibility enhancing cameras, at least one of those systems had been repaired for any reason, half said they had issues with the features after the job was completed. In our own publicly accounted conversations with diagnostic companies, many have told us that claims cost mitigation and cheap solutions contribute to crash detection fix challenges. Failure to provide reasonable explanations as to why a necessary claim-related cost would not be covered is a problem for every single repairer you will speak to today. If operations are not specifically excluded in the policy and otherwise documented as necessary by the vehicle manufacturer, the consumer, who does not understand the technological needs of their vehicle, is at a disadvantage in arguing when there is not a reasonable case to be made for denial. This is why your department is exhausted by the increasing mounds of complaints. This industry is an amazing one. We help people in a time of need after they've experienced significant tragedy. But the consumers we serve, they need more. They need your help. They need your support. They need an infrastructure that allows for individuals, for families, for moms and dads who simply need to get their children to school events safely, to be empowered in advocating for their safety and their financial well-being. They need a system that ensures that if someone promises to make them whole, that they do. They need a system that allows them the ability to challenge those responsible for the cost of that promise, without feeling like they're single-handedly responsible for taking on billion-dollar corporations that make decisions based on the risk rather than the right. They need the ability to ask for help from trained, unbiased professionals who can help arbitrate the right outcome. And when that exists, as it does in other states around the country where it's already allowed for, consumers are successful in advocating for themselves without burdening state-run systems. Your departments need reprieve, your consumers need support, and we appreciate your time and for you hearing our perspective and look forward to recognizing Washington for standing by their motoring public as an outcome to these conversations.
Thank you, Aaron, and the Board of Society of Collision Repair Specialists for taking time away from your meeting today. Next, we're going to focus on the Washington State perspective. We're thankful to have so many speakers that have a tremendous amount of experience working here in Washington State. Next up is John Walker Jr. from Moss Solutions. John, before providing your thoughts, would you please explain how long you've been providing insurance-related services in Washington and what those services are?
Thank you, David, for having me. Thank you for the Office of the Insurance Commissioner. I have been in the auto body world for most of my life. Repair industry. I grew up as a body shop helper. My dad managed body shops for many, many years. And after college, decided to follow in the family footsteps. I'm a second generation appraiser and have been doing that professionally for 18 years now. And so I have seen many, many thousands of vehicles, repairs, disputes through my career, and have done so almost exclusively here in the state of Washington. And so I'm honored to be here and to chat a little bit about that. I appreciate the prior comments that have been made in regards to dispute resolution, and that would be mostly what I have narrowed my thoughts down to is how can we improve the process of what's called the appraisal clause. And I think mostly the biggest issues I've been finding have narrowed down to a few things, and the biggest factor in these disputes is that there is a lack of education. Many consumers, public adjusters, insurance companies, staff adjusters know very little about what's built into their policy in what's called the appraisal clause. It's an alternative dispute resolution designed to minimize the costs in a repair dispute. And many times we see a lot of appraisers, umpires who quite frankly don't understand the policy or the process, partly because there's no significant or clear defined rules that are to be followed. Now it's based on an old 1940s policy that says it's roughly based on that gives appraisers and umpires a small amount of guidance. Other than that, I've had a mentor call it the wild, wild west of resolution. And quite frankly, a lot of these consumers are buying policies of which they do not see or understand. And a policy is contractually bound in which they are finding they're paying for a certain amount of coverages. And we've seen a lot of, if you bundle or if you save a certain percentage or you only pay for what you need or what you want, you don't realize what you need until you need it in an appraisal or in a car accident. And so in many ways, consumers unknowingly are paying for less and less as they attempt to reduce their costs in a policy. And sometimes you'd like to pay for, as I borrow a phrase from my dad, you'd like to pay for Pinto policies, but then you'd like a Porsche service when you get into an accident. And so I recognize that concern, and I recognize that part of the pulse of the process. I think the education too will help consumers. I think a lot of the complaints, I'd be curious to see if the complaints came before or after they used this appraisal procedure that is built into their policy. They knew this policy, they knew that there would be disputes, and there should be a simple way to resolve it. And that's where I would advocate for education to help the consumers, but also the appraisers and umpires that are participating in the process. There are many there's many associations out there who actually train on the ethics and the procedures and the processes that go into an appraisal clause. And really what we're looking for is, for most of these associations will teach the general guidelines and ethics regarding appraisal clause dispute. And so you have, for auto claims, you have the International Automotive Appraisers Association, and property and casualty also for the IAUA, the Insurance Appraisal and Umpire Association, the Windstorm Insurance Network, which I am a part of, and I receive annual training on ethics of appraisal. You also have the NAIIA, National Association of Independent Insurance Adjusters, and the Property Loss Appraisal Network plan that teach the ethics behind appraisal, when it should be invoked, and when it should be used. And really what I see sometimes out there in the appraisal dispute is many of these appraisers and umpires are stepping out of bounds in their attempt, their worthy attempt to try to reach a resolution. I believe that they're not understanding the process might be hindering the process as well. So I guess my comment today would be mostly for and to advocate for some amount of training or general rules implemented by the state, or the OIC, in an effort so that we can all speak the same language. We can all play by the same rules, play in the fair arena in which we are hopefully reaching a common objective, which is to find out what the true amount of the loss is. And really that's the crux of an appraisal. It should be unbiased appraisers attempting to reach an agreement and find out what the true amount of loss is. And I unfortunately see that it's being weaponized, and we're seeing that across the country in other states. And when this process is weaponized, then we have large invoices for appraisal, the appraisal fee, umpire fees, attorney's fees, and ultimately at the crux of it, the insured, the policyholder, is the one that ends up losing through the process. And I'd like to, so that would be my only thought today is to aim towards a fair, level playing ground where the objective is to reach the amount of the loss. No one wins, no one loses. The truth is the truth. And I'll leave my time at that. Thank you very much.
Thank you, John. Up next, we are very happy to have with us a longtime veteran of Washington claims, Roger Howson with Claims Dispute Resolution. Roger, we've been discussing a lot of auto-related issues. Please feel free to add any thoughts that come to mind for residential or commercial property loss as well. Also, would you let everyone know a little bit when you started working claims in Washington and the types of services you provide?
Thank you, David. I appreciate you putting this together. and I acknowledge you're probably the first deputy commissioner with actual claims experience, which is much appreciated. So for the viewers or listeners, I have 46 plus years time in the industry. I could reasonably say I'm the longest licensed public insurance adjuster. I'm also a licensed independent adjuster. I like to say I'm the devil everyone knows. I'm probably more often the umpire than anything else on appraisal. I'm going to hijack this hearing to take it for a brief time toward residential and commercial, like David said. So the bottom line for insurance claims coverage in the state of Washington, actually in all 50 states, is the 1943 New York Standard Fire Policy, which had only 165 lines. In other words, the original policies were only, frankly, 1 page long. And the appraisal provision in the 1943 New York Standard Fire Policy is the basis for all dispute resolution. So now, having said that, let me say that Washington State has the most outstanding consumer protection legislation in the entire country. We've got the Fair Claim Practices Act, and we've got the Insurance Fair Conduct Act, IFCA, if you will. And it has codified insurance company performance. And it's really quite simple. I won't go into all the WAC, the Washington Administrative Code, but suffice to say that an insurance claims investigation is supposed to be completed within 30 days. Those of you that are watching that are in the industry know that that's sometimes not possible, but communication needs to happen after that. Also, the insurance company is required to respond to pertinent communication within 10 working days or 2 weeks. And then they're required to provide a reasonable explanation for either a claims denial or claims payment within 20 working days. That's kind of funny. They say 30 days, just calendar days for the investigation. And then they talk about working days for communication and for payment. Anyway, that having been said, quite frankly, if that is complied with, it should satisfy all consumers. I'd like to thank John Walker for addressing the fact that unfortunately, consumers are unaware of their coverage and what they're buying. Insurance is a price-based commodity, and for consumers, it's a race to the bottom. No consumer brags about how much they pay for their insurance. They're well aware of how expensive their vehicles are, or their homes, or their consumer products. But when it comes to insurance, most consumers are looking to pay as little as possible. So there does need to be more transparency within the industry, and not just transparency, but coherence, so that the consumer knows what they're paying for, and they've made that decision. And I agree with John Walker that it's unfair for a consumer to pay least for their insurance and then expect the most service. You get what you pay for. That's only fair. That having been said, since we do have, as I said, Washington State has the best consumer protection legislation in the nation. The problem is there's no enforcement and there are no consequences. So there is very little compliance with those requirements. So what I would suggest, and David, I'm throwing you a curve here, is that the Washington State Insurance Commissioner basically start enforcing by putting together basically a financial penalty. In other words, citing companies and individuals for violation of the Fair Claim Practices Act. It should be kind of like a speeding ticket. If you run a red light, you can get it, you should be ticketed. So therefore, if you violate any of the WACs, whether not completing your investigation within 30 days, not providing a complete explanation, then the insurance commissioner's office should be writing tickets, if you will. And it should be quite simple. Then the other part, and again, David, I'm throwing you under the bus, but I think that this is something that would be very useful, is the commissioner's office should act as the magistrate. They should be able to have hearings, whether virtual or otherwise, to determine, because obviously, if someone has been cited for a violation, they should be entitled to be able to argue against the fine or whatever. And then also in terms of many of the disputes, the problem is the cost of resolving these disputes is beyond the purview of the consumer. They just don't have enough money to be able to adjudicate their complaints or adjudicate their differences. The other part is, and John alluded to this, and that is people staying in their lane. In other words, there's coverage under the policy. In other words, there's contractual language. And there is what it costs to complete repairs, whether it's to a residence, commercial building, or an automobile. And so I think that there needs to be better qualification of whoever is determining the damages. There are people that know coverage very, very well, and there are people that know damage very, very well. And quite frankly, it's not nuclear physics, it's not quantum mechanics, it's pretty basic. And finally, the last part, which again is something that should be explored, and that is from a long time ago, one of my partners said that adjusters actually should be compensated neither by insurance companies nor by the consumer. They should be professionals licensed and compensated as neutral. They should call it the way they see it. And they should be well compensated because they need to be well trained. The problem is, and let me back up. I've been told, and this is anecdotal, but it came from someone within the industry who represents the industry, that one of the major insurers right now, that fully half of all their adjusters have less than a year's experience. And so what we've got is we've got a lot of inexperienced, poorly educated, barely trained, and I'll call them professionals because I think that everyone is doing the best that they can, but they are evaluating damages or determining coverages for which they are not yet qualified. So if you want qualified professionals, they need to be well compensated, they need to be well trained, and they need to be certified by an agency that is unbiased. And I'll leave you with this also, is that at least in the 1943 New York Standard Fire Policy, it is said that the appraisers should be, they're supposed to have no bias, but they are also supposed to have no basis within the outcome. In other words, they cannot be compensated or should not be compensated on a contingency basis, because then they have, the colloquialism is a dog in the fight. And that's the same thing on the insurer's side. In other words, they should have no financial interest in the outcome of the appraisal and or of any dispute resolution. So there needs to be, again, probably a change in the way claims are handled, if at all possible. And it would be self-funding because frankly, if the insurance commissioner were citing people for violations, that generate its own payment. So again, I apologize for being so inarticulate on this, and I'm going to cite my time now back to David. Thank you.
Thank you, Roger. Next, we have representatives of the Washington Independent Collision Repairers Association, current president Justin Lewis and past president Jeff Butler, to speak about their experiences with photo estimating. Justin and Jeff, welcome. Can you explain how long you've been in the auto repair industry in Washington?
Sure. Thank you, David. And thank you to Commissioner Kreidler for the opportunity to speak at this hearing and provide our perspective as collision repairers representing Washington Independent Collision Repair Shops. I've been in the industry for 34 years. I started in aviation and moved into automobiles, been fixing cars since I was 10 years old, and I run a collision repair facility today in Seattle.
I was born and raised in the industry. I'm second generation. My dad opened the shop back in 1994. And for the last 6 years, I've been the chief's operations manager for the shop.
Yeah, so David, to get started, the Washington Independent Collision Repairers Association, we represent independent, locally owned small businesses. We provide education, training, talk about regulatory compliance, ethical and professional business practices. WICRA was formed in part to pass legislation to improve consumer protection for safe vehicle repairs, because that's a big missing. We were asked to speak today about photo estimating, and with that comes kind of the virtual claims handling. We thought the best way to do that was to poll members. Justin and I have our own daily experiences, but we reached out to independent collision repairers across Washington. We sent out a survey, and we're going to share the results of that survey. We sent out north of 65 surveys. We got 30 back. We just did this in the last 4 days. And we've been compiling our presentation as of to about right now. So the information is live and reflective of the current market conditions. And just to be clear, we didn't survey national chain repairers, insurer preferred shops like that. We just represent local independent small businesses. With that, I'm going to screen share. Am I set up to screen share, David?
Yes, you sure can.
All right, let me jump into that. Stand by. I want to pull up our survey data here. All right, David, would you confirm that you can see that?
We can.
Fantastic. We're going to get started here. Our survey consisted of 10 questions, 4 before a vehicle was brought into a repair facility for repairs, and then the remaining 6 after. The survey questions addressed how accurately vehicle damages were evaluated by insurers prior to a consumer taking the car to the shop for an estimate or repairs. Here is the first survey question.
Yeah, so the first question that we submitted to the shops to respond to was, how many initial photo estimates from insurance companies do you see at your repair facility each month? Over the 30 shops that responded, we had a total number of 1,291 photo estimates accounted for over the course of each month.
All right, next question.
The second question we presented was, what percentage of these initial insurance photo estimates are accurate and will economically restore the vehicle to its prior condition? We only had 2% return of insurer photo estimates being reported as accurate. So breaking that down, of the 1,291 estimates, that means that only 26 out of those 1,291 were reported as accurate. Over the shops that responded, 80% of those shops had a big demanding 0, almost as though they were writing in frustration. It was a very common response that we got. So there was 80% of shops that reported 0%.
All right, next question regarding accuracy.
Yeah, so the third question was how accurate, and we broke that down over 3 categories: small damages, moderate damages, and major damages. With the respondents, they reported that 28% accuracy for small damage estimates, which then dropped down to an 18.5% accuracy for moderate damages. And then overall for major damages, we found a combined 14% accuracy from the shops that responded.
All right, and this last question revolving those estimates that repairers are seeing is around safety.
So yeah, so the last question in this section was how many vehicles per month are driven to your repair facility that already had an initial insurance photo estimate that were unsafe to drive? And that number was 319 reported by the shops, which is a staggering number we found, because a lot of those customers that we had spoke to on my shop were not aware or made aware that their vehicle potentially was unsafe to drive. So our customers were driving vehicles on the road that may be unsafe for them or other people that are on the road.
And I wanted to note, we outlined, and I put the standard we used when asking this question. Unsafe is defined as the collision energy management system was compromised, including deployment of the airbags or seatbelt pretensioners. The airbag light was on, which means the system won't respond. The vehicle has structural or frame damage. The vehicle has suspension damage and or structural wheel damage, not just a scratch in the wheel, and other issues that make the vehicle unsafe to operate or unsafe around other vehicles. All right, so that was the first survey questions. Now we move into the desk review of estimates and the virtual claims handling process. This section addresses how insurers interact with repair facilities while a vehicle is being repaired. And here's the first question.
So the first question for this section, now keep in mind, this is as the vehicle is at the shop. We wanted to know what percentage of insurers send damage appraisers to the repair facility to perform an in-person inspection, as well as discuss the repairs with the shop. We found that just 6.6% of respondents said that they still see insurers coming to their facilities to discuss and look at the vehicles to understand what needs to be done.
Let me just clarify that, because I think you misspoke there. 6.6% of insurers are still sending estimator inspectors out to the shop to look at a vehicle and discuss the repairs. And I won't use the name, but there is one carrier that almost exclusively rose to the top here that is still out in the field inspecting cars. It is almost exclusively just one carrier.
Yes. So overall, that means that 93.4% of automobile property damage claims are settled solely based on reviews of photos.
All right, next slide.
So next question we brought was when your repair shop or facility submits an initial supplement repair plan with photos to an insurance company, how often does the insurer pay the full cost of the repairs from your initial submission? We found that 6.9% of shops reported that an insurer responded with a full payment the first time that information was submitted.
All right, and this next question is regarding submission of information and how often shops were finding they needed to send information to their customer and the insurance company multiple times.
Yeah, so the last question spawned this, being that we're only seeing a little over 6% of initial. How many times, how often is it that you're submitting this same information again? So we found that 70.6% of repair facilities are reporting they had to submit essentially the same information over and over again to the insurer. Those responses were ranging from 3 to up to 12 additional submissions with the same information.
So I want to provide a little more depth on this particular answer from some of the other speakers today. The conversation of claim delay has come up, and this speaks to claim delay and repair delay significantly. I know for myself at my repair facility, my staff has reported having to wait 2, 3, 4 weeks for a response and continually send documents and information more than a dozen times. So in the topic of claim delay, this is a huge portion of what drives the length of repair for repairers when they just can't get a response that's timely. All right, let's move to the next slide here.
So that brings us to this next question. When your repair facility submits an initial or supplemental repair plan with photos to an insurance company, how many days does it take for an insured to respond to you? So there was a range. So the range we received from the shops was between 1 to 32 days. I broke those into two categories because I wanted to figure out the average between the two based on all the responses we got. The overall average was about 11.5 working days to get a response on that estimate. And keep in mind, the percentage of estimates that actually took care of the full repair costs was 6.9%. So multiple submissions, multiple days, it drags out.
All right, next question.
So next question, when the repair facility submits photos to an insurer to document damage and repairs, have you ever had an insurance company, appraiser, or adjuster tell you that they can't see that much damage in the photos and then overall reduce the payment for that portion of the repair? And if the answer is yes, how often does that happen? So we found that 63% of respondents said that they routinely are told that they're unable, adjusters or appraisers from the insurance company are unable to see the amount of damage that they've listed on the repair invoice.
Okay.
Yeah.
A little bit more information and clarity about this particular response. It's really important to note that that one carrier I referenced that is still out in the field regularly, they come to my repair facility every day. They pay the cost of repairs. They're out generally in a timely manner. They coordinate inspections with our facility. This is not problematic. It is kind of like a pre-COVID claims handling. It's timely, it's efficient. Those particular insureds don't have problems with those claims, don't have out-of-pocket expenses, and generally don't have claims delays with that specific carrier. All right, and here's the last question in the survey.
So the final question we submitted to them was, how often do insurance company adjusters deny your repair plan and tell you that your facility needs to provide a supplement based off of the insurance estimate instead of what you provided them already? So we found that 63.4% of shops reported that the insurers regularly deny the repair plans and instead insist that the shop essentially match or rekey their estimate to submit additional damages. So that obviously takes time on both ends, getting the response initially to do that. And then obviously it's not the responsibility of the shop. They're trying to essentially shift the burden to the auto body shops to take care of the supplemental process.
All right, that completes the survey. The next thing we did, and we just have a little bit left, David, is we put together a couple of photos. We asked shops to submit some photos of vehicles damaged that they had in their facility, what the insurance initial estimate was, and what the repair costs were. So we'll start here with this slide. The insurance photo estimate was $8,760, and the actual cost of repair is $31,269. In this submission, this car is vastly undrivable and seriously damaged. $2,277 was the initial photo estimate for just not even all the parts you can see in this photo. The actual cost of repair is almost 20 grand. And note the angle of this photo. Here's looking inside. See the wheel damage right here, right? That's not going to be picked up in just an exterior photo estimate. This next photo, this vehicle has structural damage, internal damage, inner panels were damaged in this vehicle. The initial photo estimate was $5,894. After the vehicle was at the repair facility and torn down, the insurer received an estimate from the shop, but only increased its offer to $12,600. The actual cost of repairs, just over $20,000, and this consumer had some out-of-pocket expenses to pick up their vehicle. But this one, we chose this one because it looks like nothing. And you'd have to zoom in. There's some damage right down here on the bumper and maybe the light right there. It just, at a glance, you just think there's just very little damage to this vehicle. Once it was inspected at a repair facility, though, the actual costs were $15,194. And I did put up that the repair facility, based on its in-person inspection before teardown, wrote $8,142. So significantly more than just a photo review. And that's the point we're trying to make, is photos don't tell the whole story, and photo estimating or photo claims handling is just inappropriate. This particular slide shows damage to a bumper. It looks, again, it looks minor. The insurance photo estimate was $649. the actual cost to repair, $5,448.
Like this one was an AI estimate, if I remember correctly,
This was
the artificial intelligence.
Okay.
estimate, Yeah.
we zoomed in here. You can see the bumper is broken. You can see the sensors missing. The splash shield here is torn. So a simple photo estimate, consumers taking photos and getting a check in their bank account in 24 to 48 hours, thinking that they've been covered, is not the case. A closer inspection or the actual cost of repairs significantly more than what the insurer wrote. So this leaves us with our final closing statement. We have some thoughts about this circumstance. What's the outcome of photo estimating and virtual claims handling? Well, thousands of consumers are unknowingly driving vehicles that aren't safe to drive. The vehicles, when their safety systems are compromised, they won't perform the same in a future collision as the manufacturer designed in a subsequent collision. Consumers are having to pay out of pocket for repairs. It's like having a second deductible that wasn't disclosed to them when they purchased their insurance. Thousands of consumers are getting far less than their actual damages when they rely on the insurer's photo estimate and then just cash out from their claim. Rental car coverages are being exhausted waiting for insurers to respond to repair facilities about damage. Insurers are shifting some of the administrative burden to either the consumer or the repair facility in navigating the claim.
Well, the rental car one's one I want to touch on really quickly. Most policies, if they're first party, if they have rental coverage, cover 30 days of rental car. So if we have an estimate, vehicle comes in, we take it apart, it's an average of 11 and a half days up to 31 days, some shops are claiming, to get that estimate process to even start the repair of the vehicle. A lot of these customers are running up against their rental limits before the car started or mid-process. So now they're out of pocket for the rental coverage for the remainder of the repair.
And lastly, David, we wanted to point out, we reviewed the insurance regulations and saw quite a bit of reference to insurance estimates. And we have some questions for the commissioner about those regulations, specifically the one in front of you that references when a shop's estimate exceeds the insurance estimate, the insurance company is required to advise the claimant that they will have or may have out-of-pocket expenses. In my personal experience, I hear the word will instead of may used consistently. This code seems inappropriate given the current state of how claims are handled, and that insurance estimates, I mean, I don't even know what qualifications, if any, insurers have to meet standards in writing estimates. As collision repairers, we have experience, manufacturers training, industry training. We're liable for the repairs we perform. Insurers are not liable for any of those. So there's a big conflict of interest there, and we're pointing that out in the regulations. The second regulation referencing the insurance estimate and labor rates, again, relies on an insurance estimate, and as we're showing, are consistently inaccurate. The last 2 points here, we're surprised that there are no standards in Washington State regarding claims investigation. Like other regulations, this Unfair Claims Practice Act subsection 3, failing to adopt and implement reasonable standards for prompt investigation claims, there isn't anything defining this. Unlike the communication standard that requires an insurer to respond within 10 business days and some other definitions, the regulations are silent here. And lastly, this regulation delaying the investigation or payment of claims by requiring a first-party claimant or his or her physician to submit preliminary claim report and then requiring subsequent submissions which contain substantially the same information. Boy, we'd sure like to see this updated to reflect. We don't treat people, we treat cars. We're car doctors. This regulation reflects what we're seeing in our industry. That concludes our time. Really appreciate the opportunity to speak and provide information at today's hearing. Thank you.
Yeah, thank you.
Great. Thank you, Justin and Jeff. Next, we have a longtime veteran of the Washington auto claims environment, Mike Harbor of Harbor Appraisal. Mike, thanks for being here. Can you also let folks know a little bit of your history working Washington state claims?
Well, I started back in 1987, but first I'd just like to thank Commissioner Kreidler and for you, David, to actually listen to us and having me be able to speak my piece. When listening to everybody else this morning, because I had all my notes and everything I was going to say, I just chucked it because there's been so many good speakers and so much information that's been provided by people that are experts in the field. A couple of the things that come to my mind, and let me finish even answering your question. I used to own one of the largest shops in Tacoma for 25 years. And so I learned about this industry and how the development and the sophistication in these automobiles has changed over the years. It not only is an art to be able to repair these vehicles and do it properly, but you have to be a computer expert, a mathematician. I mean, the people that are repairing these vehicles nowadays, they're amazing. It's different than a mechanic. It's different than somebody changing tires or anything like that when you're talking about body damage and the damage caused in an accident. Since closing my body shop, and that was in 2012, I now have a public adjuster's license and an independent adjuster's license. I've maintained my dealer license, car dealer license. I'm also an appraiser and a real estate broker. It's something, listening to some of the comments from the insurance industry, that there are no problems, that it's been kind of puffed up a little bit by the OIC, the insurance commissioner's office, that there really isn't a problem. And that's what I've been hearing for the last 10 or 15 years. Well, there's really no problem. Well, I have 5 very dedicated employees that are some of the best people I've ever worked with, that are working as hard as they can to assist consumers, people just like you and I, that have gone through this terrible situation of an automobile accident, or maybe a fire in their home, or burglary, or whatever, water damage. We do homeowners claims and auto claims. And I can tell you that the number of people that we're working with, it just seems to be increasing all the time. So there is a problem. And I think we should just try to keep it simple. What you had asked is for me to kind of share some of my experiences and the things that I've seen. And I started making a list, and it goes on and on. I think most of it has already been touched on, but abandoning vehicles. If an insurance company decides that they don't want to handle the claim or settle with a body shop, they're abandoning vehicles. The investigation of claims has just really taken a back seat to really trying to take care of the insureds or the claimants. But I've got quite a list, and it's just like, you know, we've got 10 minutes to discuss this. We could easily take all day. There's been great presentations so far. I really think when we look at talking about the number of complaints as a percentage and the data set, first thing that came to my mind is the airline industry. I don't think the airline industry would settle for a 0.5% failure. I don't think any of us would want to settle for that. And when we're talking about the sophistication in these vehicles nowadays, it is a matter of life and death, not only for the person driving that vehicle, maybe that's been improperly repaired, but for the other people that are driving that have to watch that vehicle coming towards it. And is it going to function properly? Is it going to lose control? Is it going to come across the center line? The appraisal process that's been discussed, as you're well aware, you know, I tried to champion a change within that system. The appraisal process is great, but it's not required in our state. So it's just by how do I want to say this and be politically correct? I guess the goodness of their hearts that the insurance industry provides that provision in the policies here because it's not a requirement. But what really would solve a major part of the problem, because if someone has a $500 or $1,000 underpayment on a claim, either to get the repairs completed or on a total loss claim, to invoke the appraisal process, they're spending money to do that. That's not recoverable. And as I testified to the legislature, when you have a claim, you have a deductible. You pay your deductible. Your insurance company is to pay the loss. If you have to now pay to prove that there's additional money due to you, you've in essence paid a second deductible. That's just not right. That's just, I mean, in all fairness, the state of Oregon has it set up to where if you recover additional money, more than the insurance company has offered, then the insurance company is responsible to pay for all costs and fees. And to me, that's common sense. It's fair. That's what I'd like to see happen in this state. And I believe it would help correct a lot of the problems that we're having with claims and with underpayment of claims. With that, I guess I really, you know, this has gone longer than I think it's supposed to, and I don't want to take more than my fair share of the time. I really do appreciate having the opportunity, and I really think that the commissioner's office, the fact that you're paying attention and that you've called for this workshop, is a good feeling to me. I just hope that the commissioner would enforce the rules that are already there. Make sure that when there are violations, as has been mentioned already, that there's some consequences. Otherwise, what's the point? So with that, hopefully we have some good comments. I'm looking forward to hearing from Erica. And hopefully we've got some consumers that are going to share their experiences. Anyway, thank you very much, David and Commissioner Kreidler.
Thank you, Mike. Yes, if there's any consumers that are wanting to provide comment, we are just a little bit behind schedule. We will be accepting comment in just a little bit, and I'm going to keep the workshop open for as long as people want to provide us comment. Next, we have a National Association of Insurance Commissioner Consumer Liaison Representative, Erica Eversman, with the Automotive Education and Policy Institute. Erica is a national expert on the consumer experience and ideas on how to help their situation when the claims process breaks down. Erica, thank you for joining us.
Thank you very much. I appreciate it, Deputy Forte, and I would like to say thank you for the opportunity to get to be here also to Commissioner Kreidler, and appreciate the fact that you are having this particular hearing. I would like to note a few things to begin with, and that is one of the issues that insurers have suggested in this matter is that there really aren't increasing complaints, et cetera. One of the things that, as a person who is a consumer liaison with the National Association of Insurance Commissioners, that we address frequently is that the commissioners across the country lament that consumers do not know that their insurance department even exists. And without that knowledge, dissatisfied auto insureds simply have no ability to do anything other than either accept an insurance company's claims offer, even if they're dissatisfied, or if they have the financial wherewithal to be able to sue and go to court. And that happens quite infrequently. So organizations like mine have been working diligently to inform consumers that there are the departments of insurance in each state and territory, and that in fact, consumers can file complaints with those departments if they believe they have been treated unfairly or they have specific issues that they need to raise about their particular insurer, and in this case, I'm largely talking about the auto insurers. So as a result of much of this hard work, consumers are beginning to become more aware, and they're increasingly likely now to file a complaint. So there are a few things I would like to address. Specifically, I would like to talk about surveys that insurers like to use to establish what is common and therefore acceptable for payment in a marketplace. Surveys are routinely cited or talked about, but understand that there are very few insurers who actually engage in a survey of body shops to determine what the true market rates are for repair services. State Farm is a notable insurer that does, in fact, perform surveys historically. But there have been some disturbing things that we've discovered throughout the years about their survey practices, and other insurers often rely on the base survey that they perceive that has been begun by a particular insurer. So let me start by saying that insurers are inherently unreliable. One, that the insurers do not necessarily always allow all of the body shops to participate. So most of them those that do exist are online. And to be able to participate, you must have, of course, an ID and a password. That is something that the insurer issues to you. And if you are not a body shop who necessarily is in favor, then the insurer either doesn't or can avoid including that particular shop in any given survey. Insurers don't limit any surveys strictly to independent shops, and they utilize the contract rates that have been negotiated by their direct repair shops in their networks. So if I refer to the phrase DRP, I'm discussing a direct repair shop or a network shop arrangement. So to become a member of an insurer's network, you must agree to certain specific activities and limitations that the insurers have identified. And these are largely to control costs, and some of them are perfectly reasonable, and others perhaps not so much. But these shops have already agreed to a discounted rate in exchange for being promoted by the insurer or having referrals made to them. Those are not fair market rates. And as a result, they have absolutely no business being included in a survey of what is a market rate in any given area. There's also activity that insurers have engaged in to hide the true amount that they pay for labor rates and for procedures. And this has occurred by providing lump sum amounts in a line item rather than actually increasing the labor rate field when there has been some concession by the insurer to truly increase that rate, or by including a particular repair procedure on their own estimates. So these practices disguise the true amounts that insurers then pay for labor rates, or whether they pay for a particular procedure, for the online databases that they're utilizing and that they are uploading into that information. And those databases are then relied upon and utilized by insurers to justify to departments of insurance and other entities the labor costs and whether a procedure is routine for any given area. And we know that this has been occurring since at least the year 2000. So this has been going on for at least 22 years because of litigation that has ensued and discovery that's been produced in various pieces of litigation that has become public record. Then we end up in scenarios of the legal obligations versus insurer desires. I routinely recommend to shops that they include all procedures they engage in with a vehicle repair, whether they charge for that activity or not, for liability purposes, so that they can identify the actual activities they have performed on the vehicle. And in California, for example, California's consumer protection laws require disclosure of all activities that are taken with a vehicle repair. Otherwise, it's a violation of the California consumer protection law. However, after advocating that shops make certain that they detail every activity that they've engaged in with the vehicle, even if they put a zero charge on their particular blueprints, or their repair plan. And what we began seeing is that many California shops were receiving backlash. In particular, they were legally required to provide that information, but they were receiving backlash from their insurance partners when they started including procedures that they performed on consumers' vehicles, because the insurers did not prefer to have that information become part of the overall estimating database as reasonable or necessary procedures or activities. And I would like to simply point out in relation to the surveys a few quotes from Judge Bertoli, who was the judge who determined Wilkins versus Del Ross and its companion case Mason versus Ellis in Sonoma County in 2009. And this matter was actually one in which third-party claimants were challenging what, in this case, the insurer was State Farm, what the insurer had identified as the prevailing labor rate for that particular area. And I make a note of this because, again, these were third-party claimants. These were not first-party insureds who may otherwise have been bound by policy provisions, but these were folks who were recovering under a negligence theory, not under a contract theory. And one of the things that Judge Bertoli stated was, and I quote, "Quite frankly, I have made no bones about it on the record before when I've heard these cases. I strongly question the intellectual honesty of the labor market survey that's done by the insurance companies and their methodology." And he later went on to say, quote, "If State Farm chose to determine their price by reading chicken entrails and consulting with the three witches from Macbeth, that's fine. I think that's just about as accurate as the survey itself is. I think that survey from a statistical standpoint would get a first-year college student a flunking grade." And I think that fairly well sums up the benefit of insurer surveys in determining what the actual marketplace is. Moving on to there's an overall failure by auto insurers to provide adequate explanations to insureds and to third parties about what it is that they're paying for, what they're not paying for, and how they justify refusing to pay for any particular procedure or increasing the labor rate. First, no one who is not involved in the collision repair industry or is an auto insurance person can understand an estimate. And an estimate was always defined for exactly that purpose. It was designed to be an estimate of the likely cost of repair. And most of these laws were put in place back in the 70s as consumer protection laws, and they applied to the body shops who would be performing repairs to vehicles because we didn't want people to initially think that they would be paying $100 and end up paying $2,000. So over time, the whole concept of the estimate really has fallen by the wayside as it relates to the repair professionals, because they're no longer making some educated guess about what they think it will cost to repair a vehicle. They are increasingly putting together complicated repair plans and blueprints for repair so that they can return safe, properly repaired vehicles to consumers. Nonetheless, the estimate continues to be the term of art. And of course, because it's a legal term, we continue to use it, but nobody can read those. And even if there's a requirement that an insurer or a shop provide information to the consumer that says, that you will notify the consumer if you are intending to use anything other than new original equipment parts. That gets buried in the estimate, and if you can't read it, then it may as well have been written in a foreign language. Secondly, insurers routinely fail to explain why they refuse repairs or procedures or particular parts other than we just don't pay for that, or that's our policy. And when they use the word policy, consumers often fail to understand that this means it's a company practice or it's a business practice, not that it is included in their actual insurance policy, and that the insurer's business practices may have absolutely nothing to do with what they're actually required to do under the terms of the policy. And this is something that I often encourage consumers to specifically ask their insurers, where in my policy does it identify that I did not pay a premium for this particular procedure to be performed, or for this particular activity, or this particular rate? And that's become an increasingly difficult phenomenon for consumers because the insurers are not pointing out to them sections of the policy that are limiting or necessarily are beneficial to them. And unlike health insurers, auto insurers, they're not providing an explanation of benefits, and there is no mechanism for appeal. So if the auto insured receives a claims settlement offer that is woefully inadequate, they really have absolutely nowhere to turn. And if they do not know that the Department of Insurance is in existence, or they have the ability to file a complaint with the department, they simply have no recourse whatsoever other than, as I said previously, if they can afford to file suit. Which brings me to the issue about the appraisal clause. And the appraisal clause is really very important for consumers because it's an appropriate alternative dispute resolution mechanism that helps to avoid litigation. And that's what the purpose of those types of mechanisms are. Now, some states like New York, Virginia, and California, they have standard form policies that require insurers to include an appraisal clause. And as a result, consumers have different opportunities to make those challenges. They can at least demand an appraisal if there is such a clause in their policy, or if it is the policy and practice of the department, or if it's a regulation that requires insurers to actually engage in this activity. So the reason why this is so incredibly important for consumers is because litigation is very expensive, and it is nigh on impossible for a consumer to find an attorney who will represent them in property loss only claims. Insurers know this. And as a result, insurers across the country over the last few years have been systematically attempting to restrict the use of appraisal clauses to total losses only and exclude partial losses, or they have been attempting to rid themselves of the appraisal clause in its entirety. And part of the reason for this is because many repairers became knowledgeable about the fact that there were appraisal clauses within many insurance company auto policies, and would point this out to consumers and say, perhaps you should hire a public adjuster, or perhaps you should hire someone to assist you in filing a claim. And what we found in my organization, in the matters that we've tracked, is that when the matters have been involved in the appraisal process on a partial loss, that the consumers have won virtually every time. I mean, the percentage is well over 98%. And when I say they have won, they have obtained in the either the agreement or in the umpire award an amount which is higher than what the insurer gave them a settlement offer for. That does not mean that they were awarded 100% of what they were demanding for the appropriate claim settlement. And as a result of this, that has caused insurers to speed up the rate at which they would like to get rid of the partial loss element of appraisal clauses. One of the drawbacks currently of the appraisal system right now is that they're not defined. They're not well set out. The appraisal clause information simply says either an insurance company or the consumer can invoke the appraisal clause. And so as a result, we don't typically have limitations on who can serve as an appraiser, who cannot serve as an appraiser, who is permitted to be an umpire. And so what we've begun to see is that insurers who are involved in the appraisal clause process are no longer selecting independent appraisers or someone who is apart from their own company, but often are either appointing one of their own employees, or in fact, often even the adjuster who was the person who adjusted the claim originally. And that's not necessarily helpful or beneficial. We've also seen scenarios in which there has been a stall and a delay in the fact that insurers won't agree to often an umpire who is not a member of the insurance industry, which makes it very difficult to find an independent umpire of any kind. And again, I make this sound like it's dire. It's actually a much better scenario. But again, there's nothing, typically the appraisals are not binding. We've had insurers who have refused to pay even after an umpire award. So it is a terrific mechanism, but it needs more guidance and it needs more precise oversight. And along those lines, we have, for example, North Carolina has proposed a fairly comprehensive insurance regulation which would require insurers to provide consumers with appraisal rights for both total and partial losses. And it goes on to set forth who is permitted to serve as an appraiser or an umpire and what the timing of the mechanism can be. So that's very helpful. And I would just like to end with the fact that please be very aware that we do not have legal standards typically for the safe and proper repair of vehicles. The National Highway Traffic Safety Administration does not regulate vehicle repair, and most states have little regulation, if any. And even in those states that do have motor vehicle repair acts or motor vehicle repair standards, those only apply to the repair professional, not insurers or their adjusters. And thus we end up with scenarios often where insurers, because they don't have to comply with the same motor vehicle repair standard requirements, we have scenarios in which insurers are basing their claims payments often on repairs or techniques that may be illegal for the repairer to perform. But they dig their heels in and say that's, even when it's pointed out to them, it would be illegal for me to repair the vehicle in this particular manner. They continue to insist that this will be all they pay. And therefore, as I said, since we do not have repair standards, we have to rely on the repair professionals to engage in the appropriate repair. But insurers often interfere with that based on cost concerns, and that puts consumers at risk. Thank you very much. I appreciate the opportunity to give my thoughts on this matter.
Great. Well, thank you, Erica, and all the speakers with us today. I just want to clarify for the record, I'm not a deputy. Commissioner Kreidler has 6 or 7 tremendous deputies, well experienced, and but I'm not one of them. Now we would like to open the workshop for public comment. To participate, please use the raise hand function within Zoom. And my colleagues, Matthew and Jesse, will move you to be a panelist when you are next up. Please just use the raise your hand function only once. Otherwise, Zoom will reorder you in the list and you will lose your place in line. Be advised, when we move you, your screen will flicker, your audio and camera will want to reconnect. Just give it a second and everything will be normal. And we're very interested in your personal experiences. If you can, please describe the details of your experience without naming any specific insurance company. We will hold the workshop open until all participants that are wanting to provide comment have the opportunity to do so. Also, please recognize we are in a public forum and we ask everyone to have respectful decorum. We are also accepting written comment through August 15th at the email address of policy@oic.wa.gov. Also know that any consumer may file a complaint through our website at insurance.wa.gov. However, please note the OIC will not be commenting today on any investigation or specific complaints we may have received. If you are on the phone and not using the Zoom app, you can select *9 to raise hand function. For folks on the phone, I will announce the last 4 digits of your number or your name, depending on what I can see. When called upon to provide comment, please unmute yourself, state your full name and any business affiliation you may have for the record. If we receive a high volume of participation, at some point we may ask you to try to keep your comments within 5 minutes. And Matthew or Jesse, if we could advance to the next slide at your convenience, and if we could begin populating any folks that have used the raise hand function. It should be on the bottom of your screen if you want to provide comment. We'll just give it a second here to see if anybody wants to do that. Hey, Matthew, how about we bring over Mr. Brown and we could hear from Mr. Brown while we're populating the queue. Fantastic. Mr. Brown, you are now connected, and if you could unmute yourself, it's the bottom left button, and go ahead and provide your comment. Thank you.
Hi, thank you very much, David, and the panel. Excuse, I'm a little rough today, but I'm actually credentialed appraiser through the International Society of Appraisers. I deal with art and antiques, most specifically, usually Asian art and antiques, but I do Western art as well. I think it was actually John Walker made me think of a question, and that is, do we have the right to request a non-photo estimate? And the second part is, will there be a follow-up meeting for personal property people? Because I got a lot out of this and I appreciate it, but didn't address what we need to deal with. So thank you, and I can unmute or I remute, and if you need me to come back and repeat, I'll do that. Thank you, guys.
Thank you, Mr. Brown. Today, I'm not answering any questions or anything. If we were to hold another workshop, we'll notify the public just like we did with this one. But thank you very much. Moving over next, we'll have Dylan McCoy, and Dylan, just give it some time to load, and we'll get you started here. Hi, Dylan. You can unmute yourself in the bottom left corner and go ahead and provide comment. Thank you.
Hi, thank you, David. I'd like to thank the Office of the OIC for holding this forum. I was really excited to listen to it and possibly be a part of it. Again, my name is Dylan McCoy. I'm with Alpine Collision and Auto Repair in Vancouver, Washington, as well as Alpine RV and Trailer Repair. Like I said, I was excited to have this forum, and once the agenda came out, I was really excited to see industry leaders like Aaron, Justin and Jeff, Mike and Erica to be a part of it. These people are really people that I've learned a lot from through my journey as a collision repairer, and I'm very excited that they took time out of their day to make comments on what we're seeing here in Washington. It's a very complicated issue, as you can see. I mean, everyone pretty much went over on their time in trying to explain what we're seeing in claims processes. There's things like photo estimating, repair procedures from the manufacturers, appraisal clauses, and labor rates are the 4 that I kind of jotted down here. I could have written a whole 2-hour testimony myself, but I think that the people that were here put it together a lot more succinctly than I could have. One thing I'd like to say is that I do agree with Christian from the insurance from NEMIC that the data that we're seeing is not the full picture of what's happening. I think that it's actually worse anecdotally with our shop and other collision repairs that we've talked to. I think that if the Office of the Insurance Commissioner were to look at specifically appraisals and how those are being handled, and like Erica said, large majority, if not 100% of the time, the settlement value is increasing. And I think that there's a lot of different reasons for that. But I think that if you were looking for data to justify any further actions, that would be one point that you could look at. Another thing that I wanted to touch on that Erica really drove home was the labor rate discrepancies that we're seeing in our market, specifically in Vancouver. We have one insurance company, a major insurance company, that is paying $8 an hour more than the lowest insurance company, and they both are saying that that is the market rate. So there's an $8 an hour discrepancy between 2 insurance companies. There's more than a 10% difference. I've had multiple conversations with people from the Office of the Insurance Commissioner about these discrepancies and what we can do about them, because obviously that's not the market rate if there's a more than 10% difference between them. And it was disheartening to hear that the Office of the Insurance Commissioner, or at least the people within it, have no ability to do anything about that. So I think that with maybe different legislation or a requirement of transparency in the surveys that these insurance companies are doing to get this rate would be a great place to start, as well as solidifying the appraisal process for consumers, because ultimately all of this stuff is hurting the consumers in Washington. And a lot of them don't know about it until they have to go through this process. And it is not a fun process. It's confusing. And none of the consumers that we talk to and work with on a daily basis know how to navigate this process efficiently, because they've never done it before. And there's multiple pieces of legislation that go into it that they just don't understand, and frankly don't have the time to deal with. The insurance companies are there to indemnify their insured in case of a loss, and they're not doing that currently across the board. So those are 2 things that I think that would be good kind of low-hanging fruit for the OIC to start with, is looking at solidifying appraisals and transparency in the labor rate surveys. That's all I have, and thank you again to the Office of the Insurance Commissioner for holding this forum.
Great, thank you very much. Up next, we'll have Jules Cooper. Jules, please feel free to unmute yourself in the bottom left and go ahead and provide your comment. Thank you.
Hi, this is Jules Cooper. I'm an electronic vehicle blueprinter in Seattle. I deal with insurance companies every day. I have a couple concerns about the office not using some of the teeth for enforcement that it does have. The office is allowed, if they find that if they have any reason to believe that any person is violating or is about to violate any provision of the Insurance Fair Conduct Act, they can issue a cease and desist order. They can also bring it to a court. They can also refer it to the Attorney General or any prosecutor in the state of Washington. The $250 penalty does not concern insurance companies at all. That penalty can be raised, and also the insurance commissioner has the ability to make rule changes. I apologize if I'm a little brisk, but as a taxpayer and somebody that gets defrauded out of money every day by insurance companies, it exhausts me that the state's not doing its duty enjoined by law. That enforcement tools are there. They can issue cease and desist. They can issue prosecutorial referrals. And to my knowledge, the state of Washington Insurance Commissioner has never done that for a bad faith insurance practice. Every day, these insurance companies ignore line by line with the use of out of area appraisers, with the use of delay tactics, denial tactics, and defend tactics. They violate the Insurance Fair Conduct of Washington. That's all I have for input.
Thank you, Jules, for your comment. Up next, we're going to have Miliha Jusuprovic, and I'm so sorry if I mispronounced that name, but go ahead and Miliha, if you're with us, go ahead and unmute and provide your comment. Thank you. Miliha, welcome. Go ahead and unmute yourself and provide your comment when you can. Thank you.
I think I'm unmuted. Thank you, everybody. Hi, my name is Miliha Jusuprovic. I come here as a plaintiff and also as an attorney. I am an attorney dealing with maritime law for the most part, and I also represent maritime insurance companies, so I do get to deal with insurance on that end. But that is not the reason I'm commenting today. I am a plaintiff in a lawsuit against my own insurance company, which I will not name. My accident happened in 2016. I was rear-ended by a gentleman who did not have insurance. So I ended up having to use my uninsured motorist insurance coverage. And I took my car to a reputable, well-regarded insurance repair, not insurance repair, but a repair shop in Seattle. Called my insurance company, told them I was taking it there. The company that I took it to issued an estimate. The insurance company received the estimate, but did not like it. They asked for additional supplemental information from the body shop, which was provided about 5 or 6 different times. The insurance company at the end ended up getting their own appraiser to come and inspect the vehicle without tearing the vehicle down, and issued an appraisal that was about 50% of what the body shop had issued as a potential appraisal without taking the car apart. Again, this didn't make any sense to me, how there could be such a big discrepancy between the body shop and the insurance issued appraisal. So I ended up going and hiring a public adjuster to help me sort all of this out, because I had no idea about this process. It was my first car accident. The public adjuster was extremely helpful with this process, and went in and did an additional appraisal of the car, and ended up essentially siding with the body shop in that it was likely going to be a total loss. The insurance company did not like that either. They then issued or sent out another appraiser, to come and look at the car. And this second guy from the insurance company came in and essentially agreed with the body shop and the public adjuster that it was in fact a total loss. And this was about 4 months in. So the car had been sitting at the shop for about 4 months, incurring daily storage fees at about $95 a day. So by the time the car was totaled, it was about 4 months later. The storage fees were about $10,000. The insurance company issued a check for the total loss for the car. They refused to pay a single cent essentially for the storage fees, and tried to negotiate with the body shop, who refused to decrease the storage fees, because as you can imagine, the body shop was correct to begin with as the first appraisal, and the correct one. The insurance company negotiated back and forth for months, and then essentially just said, we're not going to negotiate any further, sent 2 conflicting letters to the Department of Licensing, which ended up clouding the title on the car. So then when I tried to go in to get the clear title to the car, I was informed that I wasn't able to do that because the insurance company was the one who had the ability to clear up the title issue. I ended up hiring a couple of attorneys with a very reputable law firm in Seattle. While being an attorney myself now, I was not an attorney at that point. They were nice enough to take a image only claim, which, as you know, other people have testified is usual because usually low numbers, attorney's fees can be 6 figures plus, if you want to get to trial, a basic trial. I filed in 2019. The trial has been extended 6 different times. It was supposed to take place in July, has been extended to February of next year. So 8 years since the incident that will finally be in court, which is absolutely insane. I've handled very complex litigation for my team. The most complex case, 2, 3, 4 years maximum to resolution. My case currently has 315 docket entries. That means there were 315 on the docket by attorneys, which again is just mind-blowing. To have a property damage of about $10,000 in storage fees that were, you know, turned into 8 years later, not having a trial. The storage fee for 7 years now, because I was not able to take the car out of there for the storage fees. The body shop would not release it. And when I tried to get it, I was not able to. The insurance company and their lawyers stepped in to call the people to get this. This would be a gross understatement here. And this is just one example of what happens when a person been wronged tries to realize the little stuff to move along. The insurance company hires their own lawyers to file motion, things to prolong the process as much as they can, interlocutory appeals, you know, during this lawsuit. So the shop ended up, because it couldn't be removed legally, ended up suing me as well for $160,000 plus storage fees. Now, one would think that the insurance commissioner should take a look at this case. And that is what I'm proposing here, is for the insurance commissioner to take a look at this particular insurance company, and then also other ones, but take a deep dive into this litigation, because we have done the discovery, we have done the depositions, we have got a ton of information to show behind the scenes as to how the insurance companies can behave, and just the absolutely mind-boggling things that they have done in this, from the adjusters to the appraisers to the lawyers that were hired on behalf of the insurance company. The one good thing I will say the insurance commissioner's office did initially, after I got the public adjuster on board and we had to file a summary judgment, I believe, with the commissioner's office, they did issue a cease and desist to the initial appraisal company that was hired by the insurance company that did the very first initial wrong estimate. They were issued a cease and desist to that company because they were obviously not operating under the rules. And if this is just one example that gets blown up and examined, I would say that that's a huge problem. Even if it's 1% of millions of people who are insured, that's a really big number. So in closing, litigation is an option, but it is an extremely costly option, and it should be last resort for consumers, because unless you're willing to find an attorney who's willing to work with you for 7-8 years, at least in my case, good luck getting any kind of justice. And essentially, you're going to be stuck with the lowball offers that are being offered at this time. That is all I have for my comment. Thank you.
Thank you very much. Up next, we have Mel Sorensen. We're just waiting for Mr. Sorensen to connect. Mel, when you're here, can you please go ahead and unmute and provide your comments? Thank you.
Thank you very much, Mr. Ford. My name is Mel Sorensen. I'm a retired senior citizen, registered voter in Okanagan County, and my wife and I have a home near the town of Winthrop in the north central part of the mountains here in the state. Although the OIC's notice for today's workshop states that both auto and homeowners insurance issues will be discussed, the main focus so far seems to have been on auto claims. I'd like to provide some comments as a consumer of homeowners insurance. Our home is in wildfire country. Almost exactly 2 years ago this week, 2 massive wildfires blew up, threatening the city of Winthrop and large portions of the Methow Valley here in north central Washington. Combined, the Cedar Creek and Cub Creek fires consumed over 126,000 acres. They erupted at the same time, with the Cedar Creek fire running along the south side of the Methow Valley, covering large areas all the way from Mazama down to the Twist River drainage, more than 15 miles of the south portion of the Methow Valley mountainside. The Cub Creek fire ran up large portions of the Chewuk River drainage to the north of Winthrop. The Cedar Creek fire came within 1/2 mile of our home. We were subject to a level 3 evacuate now order, and we evacuated our home, loading up as many items as possible and moving them to a safe location down valley. During our evacuation, our insurer, I believe in coordination with other insurers with policyholders in harm's way, sent teams to our community to reduce the risk associated with our homes. While we were gone, they removed wood patio furniture and other flammable material on the patios around our home and placed them far out in an adjacent field. Although we had a FireWise review some time ago with recommendations for us to move the stacks of firewood that we had close to the house, we simply never got around to it. The insurance teams removed our firewood stacks and placed the wood far away from our home, out in the field or in a neighboring forest area. They cut brush and removed flammable items from other homes as well, all as the fire was bearing down on our homes. We didn't call to request this service, they simply came and did it, reducing the risk of losing our home to the wildfire that was directly threatening us. We now know that our policy contains language for allowing for this activity, but we didn't focus on that language until we were the beneficiaries of it. I came back to check on things on one occasion and saw that our stuff had been moved out into the field. It made so much sense and was deeply appreciated. Amazingly, after the fire passed us by, but before we could return home, these same teams came back to our area and brought all of our items back to our patios. I never even got a chance to thank them, but what they did was amazing and deeply appreciated. This meeting seems to be about complaints submitted to the OIC by consumers. You might want to consider setting up a log of consumer comments that express appreciation regarding their interactions with consumers. I'd certainly offer such comment. Mine is a story that didn't involve a claim that was filed. It's about a claim that never happened, in part because of the affirmative actions of our insurer. We are grateful to them for reducing our risk at a time of great risk. I thought that you might be interested in these thoughts from a satisfied and deeply appreciative consumer, and I hope you have a place to file this with other consumer statements that you receive. Thanks.
Thank you very much. Up next, we have Joanne Cunningham. Joanne, if you could unmute and begin your comments. Thank you.
Hey, and I'll apologize if I'm a little nervous. This is a really big group for me. My name is Joanne Cunningham, and I want to thank Commissioner Kreidler for allowing consumers of the insurance industry to speak. I am a consumer of insurance in Washington State. In June of 2021, my house caught fire, and the result was it was completely gutted down to the studs. In the middle of this, my insurance adjuster recommended 2 contractors that they had worked with previously, and I hired one of those contractors. Unbeknownst to me, that contractor used software which produced an estimate that was wholly inadequate. I believe that that contractor was not acting in malice. Instead, they were forced by the insurance company to work under conditions where they weren't being paid fair wages for their work. After 7 months of delays and very little work being done on my home, the original contractor had only completed a fraction of the necessary repairs. They consistently cited costs. In fact, some of the work that they had done was not to code, and they said that they would not be able to bring it to code because it would increase the cost. My insurance company allowed me to switch to a new contractor, but told me that that contractor would have to work off the original estimate and that at the end of the work, we could submit a supplement for the difference in the work. In August of 2022, the work on my house was completed and I was able to move home. I sent the new estimate to my insurance adjuster at this time. The insurance adjuster called me and screamed at me because this estimate was, while still under my insurance limits, was much higher than the original estimate from the insurer. The company asked for a breakdown of the price by trade, which was submitted. At this point, the claims representative determined this was still not sufficient, and they wanted all the receipts from my contractor for every item that they were billing for. My insurance adjuster, upon learning we would not provide every receipt for every item that was purchased by my contractor for the repair of my home, suggested that I demand an appraisal. In January of 2023, I hired a lawyer to represent me. We presented documentation detailing the cost discrepancies and requested a supplement of around $200,000. My insurance adjuster informed me that I should demand an appraisal, although he also stated he wasn't technically allowed to tell me to demand an appraisal. On March 28th, I demanded an appraisal to set the cost of the loss. It is now July 17th. It's been 80 business days since I made this request. In this time, the appraiser has come up with multiple excuses that they haven't had time to review my claim, they had an illness, they had an injury, and they've made no attempt to make a counteroffer or settle my claim. Instead, they again asked for all the receipts to cover the difference from the original estimate. So to respond to some of the comments that were made here today, I believe Mr. Schulenberg from the auto industries pointed out that low estimates result in cutting corners. This is true. It is true in the auto industry where vehicles are unsafe being driven was the example, but also in homes where work is not being done to bring those homes to code after a fire. If my house had been to code to begin with, the fire probably never would have happened. Mr. Housen pointed out that Washington State has the best consumer protections, but there's very little enforcement. Again, it's been 80 days since the appraiser was named in my case, and I have no recourse to force the insurance company to move forward with my claim. My only option would be to sue in bad faith. I am not financially able to do this, nor do I have the energy. I am tired of fighting to be made whole. As Ms. Everson suggests, a lot of consumers don't know how to file complaints or don't know that the Office of Insurance exists. I didn't know this. And so that brings me back to Mr. Reitag's comments stating that maybe this isn't really an issue and that all the data maybe isn't the best data set to represent this. Well, all I can say is I haven't filed a complaint yet. So I would estimate that the data set being used is actually disproportionately favoring the insurance industries because consumers don't have the education necessary to protect themselves, nor do they have the knowledge to file these claims. I don't know what the solution is, but I definitely think there's a problem. And I look forward to the Office of the Insurance Commissioner working with consumers to help ease this problem. Thank you for your time.
And thank you for your comment. Up next, we have Bo Bishop. Bo, if you could, please unmute yourself, state your full name and any business affiliation, and go ahead and provide your comment. Thank you.
Hello, my name is Bo Bishop. Sorry for my voice. I was at an event this weekend, cheering at an event this weekend, and I may have lost my voice.
We hear you great. We hear you
Okay,
great.
thank you. I don't have any affiliation with anyone. I do have a complaint in with the Office of the Insurance Commissioners on a ongoing claim currently. I would like to share my story. Although Mel has a great story, I wish we all had those. It just isn't the case. When I have had a great deal with an insurance company or something that has happened, we try to comment on that as well, and leave feedback on their websites and Facebooks and any other social media that we can. My daughter was T-boned in a car accident at 60 miles an hour this last year, and luckily she's alive. We have fought the insurance company for a year and a half now on this issue. The motorist who hit her was underinsured, and we're fighting our own insurance company to make us whole. She spent the better part of a year struggling through college to get back and forth to college because we live in a rural area, about 35 minutes from that college. And we've had to adjust our schedules and alter our lives to accommodate my 23-year-old daughter's college and work schedule. The insurance company, 2 days after the accident, they realized that it was going to be totaled. And we found the exact same car with about 3,000 different, the difference of miles was about $3,000. They offered us $10,000 less than that. And I told them if they could find one at any dealership, write the check, find it, and we'll go pick it up. I don't care if it was in New Jersey. I've picked up a vehicle there and drove it home in 4.5 days before when I wanted one. I've also driven to Florida when I found a really great deal on a work van. So I have no problem driving across country with a vehicle. If you can find one that's comparable, then let's settle. They could not do it. We found one local in Tacoma. I live in Oakville, Washington, and I was willing to drive there. They were not willing to pay the extra $10,000. I actually had to go through the process of filing a complaint, which we're still doing now. We've went through the umpire process, which seemed unfair. When the total loss came back, the insurance umpire seemed like it was they gave us a list of umpires that they thought were okay. They gave us a list of appraisers that they thought were okay for our appraiser to approve. And when we went through that process, their appraiser dug their heels in. We showed them, prior to the appraisal, me having to get an appraisal, I showed them vehicles incomparable within a 100-mile radius of us, and they were not willing to work with us on the appraisal that they had given. We believe that they acted in bad faith several times during that claim process. They were not willing to back us. When we hire an insurance company and the other insured is underinsured, now we have to fight our own insurance company against themselves. And they don't want to waste their time because they know that the underinsured, they're not going to be able to subjugate for, I'm hoping I'm saying that correct, for the entire amount of what they're going to be out. I don't think that the process was very easy for us. They, as the gentleman or the lady that lost her home due to fire has said, it's an exhausting process. They drug their feet. They keep asking for more information that they already have had given to them 8, 9, 10 times, hoping that either one, you don't have it anymore, or you've lost it, or you didn't keep records, or somebody deleted the photos. We've had to take it back to the same body shop from the appraiser several times. At one point, they almost sold it at auction before we ended up being able to get it back to the body shop and we think that they were trying to do that on purpose. Essentially, we tried to file a report with the police for a stolen vehicle because no one could find it. They didn't have any paperwork releasing that. So essentially it was our vehicle that was stolen, and there was falsified documents releasing it to, I believe the wrecking yard was Copart at the time, and they were trying to send it through the auto auction there. Copart is not a insurance company, so I hope I'm in naming them, it was just an auto auction site. They didn't have anything, I guess, no skin in the game in that. They were just doing what they believed was correct. They purchased a vehicle with falsified documents that they didn't know were there, and they were working through that process. But somewhere in that, we had signed nothing. We had, in fact, sent emails asking where the vehicle was, what the status was. Since there's been no, we've brought this up to the Office of the Insurance Commissioner, OIC, and we've heard nothing back. There's been no charges filed. There's been no penalties. There's been no help on that end to try to resolve the issue. We are hopefully going to resolve it. We hope. They decided that they were going to release their I guess I can call it entitlement to subrogation with the other insurance company, and we've since recovered a portion of it from the underinsured insurance company, but we've had to go back to the drawing board with the other company to try to recover the remainder. It has been a long process, and it seems like when I first brought up the fact that there was vehicles that their appraisal software was so far off, at least $10,000 off on a $25,000 vehicle, it wasn't even in the realm. We were at 55 or 60% of the value, and we weren't even close. We can't replace it. We can't make it whole. And by the time they drag their feet and then force us to get an appraiser or a lawyer, I believe it was John Walker, and then I believe it was Mike Harbor brought up the fact that we've essentially paid two deductibles, one to the appraiser and one to the insurance company in the loss of that deductible. Now we're having to pay again for an attorney to take it even further. So we are trying to go through that process. The company that I used to do the body work in the first appraisal has appraised that same vehicle twice or three times, I believe, and sent that information over in detail. I appreciate them wholeheartedly, and they're an amazing company. I wish that the insurance company would have looked at those things first, but it seems like they will use different excuses. Someone went on vacation. Well, that's not really an excuse. Somebody knew they were going on vacation, and someone else should have handled that in their absence, or somebody's no longer with the company. These are things that aren't the consumer's problem. Staffing issues, somebody going on vacation. Now we're reassigning your case to someone else. Those aren't things that the consumer should have to deal with. I believe they're stalling tactics, and now we have to resubmit paperwork because between one person and the next filing those, maybe emails got lost and things like that. The insurance company knows they have records of that and should be held accountable to keep records of that. If I wasn't paying my bill, they would have exact records of me not paying my bill, and they would absolutely cancel my coverage and have every recorded instance of that happening. And if I tried to file a claim during that time, they would fight tooth and nail not to pay that claim. whether it got lost in the mail and I had proof or any of that stuff, they would try tooth and nail to not pay those claims out. And I feel bad for the people who aren't able to afford. I know that I'm going to be at a deficit on the amount of money that we were given, the appraisal and the lawyer fees and everything that goes along with that. We're able to overcome that and put my daughter's vehicle back to whole, or since it was totaled, replace that vehicle with a safe one. But there are families out there that in Washington state that can't afford that. So they're driving around vehicles that we believe are unsafe, and it's putting my family at risk, and I don't even know it. Your families are at risk because someone's driving around a vehicle that the insurance company has bullied them into not allowing it to be fixed properly, whether it's from the insurance commissioners or the body shop, or it's been a totaled vehicle, and they just go, I'm buying back a totaled vehicle and not repairing it as full because I can't do it. Maybe they're driving around with no insurance. They're still putting Washington families at risk. And I believe it's at the hands of the insurance companies. I don't have anything else to say, so I appreciate you allowing me the time today to speak. And I appreciate the Insurance Commissioner's Office giving us this forum to be able to voice our concerns.
Thank you, Mr. Bishop. Up next, we have Stephanie Buttigieg. Stephanie, if you could, please state your name for the record and go ahead and provide comment.
That's okay. Stephanie Buttigieg. Good Italian name. I have a unique perspective. I am actually, early on in my career, I worked for a direct writer, one of their home offices in California, and then worked at the agency level, and then was an owner operator of a brokerage firm for years. I now work for Harbor Appraisal. I just want to take real fast because I want to talk to you just about some snippets of what I have seen in what I consider big changes in just the last few years, working with Mike, with our appraisal process, our public adjustment process, all of it. I'm seeing an uptick of errors on the CCC and Mitchell reports, which indicate lack of training or lack of knowledge. Lack of adjusters, just overall period, out of office distributions tenfold. I have to reroute emails constantly and follow the trail. It's just, and then they don't clearly define that actually they're gone. They usually give an indication that the employee's out of the office and leave it that way for a while, and then you come to find out they're actually not employed any longer. Inconsistencies within the actual agency themselves. So what I mean by that is actual adjusters working within the business process to their own parameter, not as a company as whole. And what I mean is, let's say, for example, we have a client that invokes the appraisal clause. One adjuster, fine, we move forward, pays the undisputed, the process goes well. We get another adjuster, same company, who claims they cannot pay the undisputed. They want the report from us directly to provide to their appraiser, to their appointed appraiser. So again, business processes within the actual agency or within the actual carrier differentiate drastically. The email process. Some of the carriers use proprietary claims processing and refuse to have direct correspondence, obviously for litigation, and just claims purposes on their end, liability. They make it very difficult for us to communicate with them. Lack of communication, period. They flat out will not communicate with us. So we have to threaten them for non-communication within the 10-day rule. Thus, more OIC complaints. I did want to touch one thing that Mr. Schollerberg, and I'm sorry if I'm saying his, Aaron Schollerberg, commented on the Texas ruling on the mandatory. We actually just came across a direct writer, one of the top direct writers, claiming no appraisal clause within the policy, denying the invoke. So I think we're going to see an uptick in that. So it's going to be interesting because consumers are unaware that they have that option in the first place. And I think this direct writer is taking that in consideration. Again, consumer advocates need to take that to a state level. The other thing that I did want to mention was an uptick in fleet and Uber driver, Lyft driver loss claims. Because it is a hard to find coverage, we are often in a area of non-admitted paper. So OIC can't help us. So those particular carriers are flat out refusing invoke. And as you know, and are probably aware, a lot of Uber, Lyft drivers are on the road, more accidents. So we're seeing that. And I think that was all that I had. There's much more. This is a very complex, there's so many layers to this process, from repair to appraisal to, you know, adjusting whatever it may be in person, whatever, just so many levels for the consumer to digest. Even on the professional side, I feel, but we do a great job in explaining the process, and we try to make sure that they're comfortable, and we take on that heartache for them. And that's all I had.
Thank you very much. Up next will be Joshua Green. And I'll just like to point out, we have a lot of people in the queue. If for any reason you need to leave and want to provide comment, we are also accepting written comments through August 15th at the email address of policy@oic.wa.gov. And with that, Mr. Green, if you would like to unmute, please provide your comments. Thank you.
Hello, my name is Joshua Green. I'm the collision director for BMW Northwest in Tacoma. First, I'd like to thank the OIC and you, Mr. Fort, for hosting this workshop and addressing these topics. I only need about 2-3 minutes of your time. I have 3 points I'd like to make about labor rates and the labor rate survey. A lot of what I have to say is in line with what Erica previously stated. My experience, though, is unique, as I've been on both sides of this argument. I've been in the collision repair industry for 15 years, with the first 7 being with a top 5 insurance carrier. I completed their brief training program, managed a couple of their direct repair facilities, and was a field adjuster. My promotional opportunities were rated on various factors, with severity or cost of repairs being the highest rated. And I honestly could tell you that I did not know what a proper repair was as an insurance adjuster. I have since been working on the repair side. I have been certified by multiple manufacturers and received industry training. I have worked my way up into managing multiple certified collision centers in the state of Washington, and have served 10 dealerships in the Seattle, Bellevue, and Tacoma markets. The first point that I want to talk about are the insurance adjuster's role in labor rates. Working for the insurance company, I was always told that I cannot pay higher labor rates than what the company approved. I was never provided a copy of the labor rate survey, as the rates were pre-programmed into our estimating software. I was, however, allowed to pay for higher labor times for some operations to make the price closer. So for example, if a shop requested 2 hours at $70 an hour and I was only paying $58, I would just give them 2.4 hours, which would equal $139. In that example, the labor operation was satisfied, but the rest of the estimate was undervalued due to the labor rate differences. Since I left this insurance company, I have never seen an insurance issued labor rate survey in the 8 years since. In fact, I didn't even see a labor rate survey when I worked for them. My shops, we serve dealerships, which means I also have access to see what the service labor rates are. The mechanical rate for my service center is closer to $300 an hour. I recently had an insurance company tell me to send a BMW X3 that needed a steering rack replaced to the dealership because my mechanical labor rate was too high at $200 an hour. The bill for this operation was higher due to the rate difference. The insurance company wanted it done at the dealership, and the insurance company was happy to even pay for it, even though I would have been the more cost-effective option, and I do have the skill level of technicians to complete that repair. Point is that insurance carriers can and often do pay higher labor rates for the same operation to be performed depending on the facility performing the repairs. The labor rate survey and prevailing market rates, again, as I have previously stated, I have not seen a labor rate survey, both working for an insurance company and managing multiple repair facilities. Somebody already asked this question, but it almost makes you question the frequency that they are sent out and the selection of shops that get these surveys. The labor rate survey, its practice itself has been examined and tried multiple times, dating back to the 1963 consent decree by Robert F. Kennedy and the Department of Justice. Again, Judge Bertoli out of California gave his definition of what State Farm's labor rate survey sounds like. He was actually hearing an appeal from Judge Cox, and Judge Cox even wrote a reasonable charge implies a range of charges. If the charge falls within that range, it will be deemed reasonable. No particular charge can be said to be the only reasonable charge, to which Judge Bertoli concurred. It's a range of prices. It's not just one number. This is evident in the insurance prices I see at my shop right now. I have Geico that pays X dollars an hour. I have State Farm that pays Y dollars an hour. Geico's not going to pay Y and State Farm's not going to pay X. So the question really is if there is only one price for auto repair work, and that is the prevailing market rate, wouldn't all insurance companies in that market pay the same price? I would also like to add, as Aaron Schulenberg said, it's not just a local issue, but a countrywide issue. Last year, the Commonwealth of Massachusetts conducted a special commission on auto body labor rates and found that there has not been a significant rate increase since 2008. The state of Washington, unfortunately, is not far behind that. In the last year, I have seen labor rates as low as $56 to $58 an hour. And this leads me to my last and the most important point, and the reason why we need to start having action on labor rates, and that's really new talent acquisition. The collision repair industry is losing their technicians to other trades due to higher wages. Additionally, vocational technical schools are experiencing decreased enrollment as students transition to other trades once entering the school when learning the potential for increased salaries elsewhere. We are losing talent to companies like Boeing, Microsoft, Amazon, and other big companies in the Pacific Northwest. These are our competitors when it comes to talent, not other shops who are having the same staffing issues and dealing with the same balance of trying to offer someone a rewarding career with benefits and quality of life while getting paid $56 to $58 an hour by the insurance carriers. If you look right now, the range for most professional trades, such as electricians, plumbers, and IT professionals, they're in the $150 to $250 an hour range. My friends on the insurance side should be very concerned about this as well. Increasing the labor rates for the markets and for Washington State and having a range of rates serves both sides of this argument. It allows fresh faces to enter the industry. It allows innovation within the industry and will honestly stabilize the industry because we are seeing a giant tech shortage. And a lot of reason for that is because they can get higher salaries, as we already previously discussed. So, I mean, that's pretty much just the points I wanted to make. I want to thank you for your time and hosting this.
Thank you for your comments. Before we move on, I just wanted to remind folks that we're very interested in your personal experiences. If you can, please describe these experiences without naming any individual company. Up next, we have Anthony Holmquist. Please go ahead and unmute and provide your comments. Thank you.
Okay. Are you able to hear me?
Yes, we can.
Okay. So yeah, my name is Anthony Holmquist, and I am an insurance consumer of Washington State who is a client of a major insurance company. January of this year, I was involved in a motor vehicle collision, and I took my vehicle to a highly reputable shop whose work I trust. I uploaded photos through the insurance's portal, and they severely lowballed my vehicle by 900% from their initial photo quote. Even after all the evidence had been produced by the shop showing what was necessary to repair my vehicle to pre-loss condition, there was still a substantial shortfall, which was still a 260% difference from what the insurer had been willing to pay the shop. So at this point, there is still a $20,000 balance that is owed to the shop that the insurer is refusing to pay. The shop sent an estimate and photos to the insurer stating what would be required to repair my vehicle back to pre-loss condition. Instead of responding to the shop's estimate, the insurer sent their own estimate stating what they would pay. The insurer never acknowledged my shop's estimate whatsoever. They unreasonably denied their estimate. They never tried to communicate with the shop to dispute the differences. The insurer failed to explain why the shop's estimate was not correct. They wouldn't respond to communication requests from myself or the shop during the repair process regarding the differences in the estimates. The insurer's adjuster tried to steer me into using their preferred shop and threatened that I may have a large bill if I kept my vehicle at the chosen shop. At this point, they gave me random excuses about labor rates, but nothing specific that would explain the massive difference, which I actually researched numerous body shops in my area and found that the body shop my car was at was one of the very lowest in our areas. And I even called their preferred shop and found that their preferred shop was quite a bit higher than my shop for the general public, which I found very odd. So at this point, my car was already taken apart, parts had been ordered, and in no way could be moved to another shop without causing major issues, additional costs, and delays. And actually, their preferred shop told me it would just end up costing more if I moved it to there. And then I relayed this back to the insurer, and they refused to reply to my email regarding that. So they didn't give me any other options. Since there was a huge difference in the estimates, I was forced to utilize the appraisal clause to dispute differences, which later the insurer and actually two different adjusters, one a manager, lied to me and told me that I could no longer utilize my appraisal clause because my car had been near completion. This was a lie, and I confronted them and told them that. And I had actually requested an appraisal 6 weeks prior to this, but they were still trying to get out of allowing me to do that. So it took me filing a complaint with the insurance commissioner in order to be allowed to have an appraisal. The appraiser that I hired for my third-party inspection found that my shop's estimate to repair was fair for the work performed and that the insurer's estimate was severely lacking and incapable of properly restoring my vehicle to pre-loss condition. Luckily, my vehicle was done about 4.5 months later, and the body shop did not have the room to store my vehicle, so they allowed me to pick it up from the shop and take it home, although there was a massive unpaid balance. The shop did have me sign papers that says that I will be held financially liable for the balance if the insurer does not pay them. So the insurance has lied to me numerous times throughout the claim, violated multiple regulations. They were mad about the complaint that I had filed, and they threatened to deny paying my claim if I didn't produce them the personal contract between myself and my third-party appraiser. I asked them where in my provisions state this. They failed to provide that to me, even though I asked them on 3 separate occasions. But I did send it to them under good faith, and I told them that I would like for them to also send me their contract between their hired professional, which I found out is somebody that they hire on an extremely regular basis. So I found it hard to believe that their hired professional for their appraisal would be able to be unbiased in the appraisal process, considering that they're hired continually by this large insurer. So basically, I had hoped that the insurance commissioner would hold the insurer accountable for the negligence in violating numerous regulations, but unfortunately they did nothing. The insurer has forced me into a financial hardship with numerous incurred costs for my appraisal, my insurance expert for consultations, legal representations. You know, I have few options to try and recover my damages incurred. So I was forced to file an IFCA Insurance Fair Conduct Act notice sent to the insurer regarding their negligence during my claims process. And now my insurer has retained legal counsel, and now I'll likely be required to do the same, which is just going to add to the already extraordinary costs that I have already had to pay for costs so far. So this insurer violated the Insurance Fair Conduct Act by unreasonably denying coverage and payment of benefits for a legitimate claim. So they violated RCW 4830.015, as well as RCW 4830.015, 1, 2, 4, 6, and 7. They also disregarded regulations governing claims practices such as WAC 284.30.330, number 1 through 8, WAC 284.30.350, 360, 370, 380, and also WAC 284.30.390, 1, 2, 2B, 4, and 6. And really, I'm just outraged that insurance companies get away with this. I pay for insurance expecting they will indemnify, but they lie and cheat and are not held accountable for bad claims handling. And I'd like to know why insurers are be allowed to sell insurance policies that don't pay the actual cost of repairs. Insurers are supposed to provide indemnification, but they are not. I'd also like to know why insurance company adjusters who are not auto repair experts are allowed to write estimates to fix cars and limit the insurer's payment based on their estimates when they are not actually automotive repair experts. I've seen that the insurer has third-party appraisers who they continually use for third-party appraisals, continuing to send them more referrals. So I don't understand how these appraisers are supposed to actually be unbiased and not try to undervalue the repairs in order to keep getting continued referrers by the large insurers. I'd also like to know why doesn't the insurance commissioner office take action against these insurers when they have documented violations? I filed a complaint, but the insurance company lied to the insurance commissioner in their response. Why doesn't the insurance commissioner make the company respond to all of my questions? And I see that the insurance commissioner only has authority to investigate when there are a pattern of practice of violations. But why are insurers allowed to break the law on individual circumstances and the insurance commissioner won't do anything about it? Why are insurers not required to inspect my car in person to see the damages? And these are just some of the questions that I have regarding what I went through in my claims process. So that quickly summarizes my case, and I just want to thank you for your time.
And thank you for your comment. Up next, we have Michael Kessler. Michael, please feel free to unmute and provide your comments when ready.
Good afternoon. My name is Michael Kessler. My wife, Kitty Bradshaw, and I want to thank Commissioner Mike Ryler and his faithful and trusty staff, who for 2.5+ years has been overseeing our complaints against 2 colluding carriers who we have been paying for approximately 20 years to insure our home and business. We are citizens of the state of Washington who had to file 2 complaints with the Office of the Insurance Commissioner against our 2 insurers for a homeowner's policy and a business owner policy. 2 insurers who colluded to deny us vital coverage due us in our time of desperate need after a 60,000-pound giant leaf maple tree destroyed our geodesic dome home that was also the home of our business, an acupuncture and herbal clinic. They did this by each insurance adjuster illicitly practicing structural engineering without a license, and each of them aiding and abetting each other in their misbehavior and misrepresentation of what was due us as per our policy contract. We find ourselves in an insurance crisis as evidenced by the commissioner's statistics, of which our story is a part. What we have come to know is that while you may have insurance, you have no assurance that the company who sold you your policy will extend coverage if and when that dire moment of need arises. Like when a 130-foot tall, 60,000-pound tree destroys your insured dwelling and its contents, as it is in our case. In essence, you only have as much insurance as you can muster the will and money to fight for. It's exhausting, and people can't conduct that fight. And those that do cannot believe they are in the fight because, like in our case, we can't find a lawyer to take our case because they are financially afraid to fight the insurance companies. So we have been forced into court, pro se, representing ourselves to seek indemnity. To make a long story short, if you can consider 2.5+ years without indemnity short, imagine with us for a moment, enveloped in a dark, howling midnight storm on a freezing January night, a 130-foot tall, 60,000-pound giant tree came crashing down onto our geodesic dome home with us in it, directly beneath the full force and momentum of its weight. It was a race with death, with nowhere to go. Just as we were struck by fate, fate spared us, when after several unbearably long moments that it took the tree to come down and crash through the upper story of our dome, cracking through the ceiling of the first floor under which we stood, the tree came to a halt, and hundreds of gallons of water came slewing down onto our heads and our business property and personal property. It was surreal, a near-death experience. But because near death is not the same as death, after realizing we weren't dead, we made our way upstairs and turned off the hot water shooting out of the bathroom wall. And along the way, we glanced over at our bed and saw the tree had laid right down across our pillows, where we intended to be asleep 30 minutes earlier. If we were in bed at midnight as we intended, but weren't because as small business owners, we had after-hour tasks that still needed to be attended to. If we had gotten to bed on time, we would have been crushed like the Wicked Witch of the West from The Wizard of Oz. And then the insurance company adjusters arrived, and we immediately knew that our problem had turned into trouble. How so? The adjuster for our homeowner policy practiced structural engineering without a license by deciding on his own that our catastrophically destroyed dwelling, as per the engineering report of a dome expert, was structurally sound and safe to live in, saying, "You have electric and water, so you can live there," while his imagined non-existent repair was being made. Then the adjuster for our business insurance piggybacked on the homeowner adjuster's wrongful denial of coverage for temporary personal housing by saying, "The other adjuster said you can live there, so if you can live there, you can work there." Therefore, coverage for temporary business premises due as per the policy was also denied. In effect, these adjusters colluded together, forced us, our clients, and our property to remain in a collapsing structure with 2/3 of its roof blown away by a tree. As per the Washington State Board of Registration for Professional Engineers, the regulatory body that issues licenses to structural engineers in the state of Washington, according to BURPLES, that's the name, the acronym for the registrar. Based on the pictures we presented to both insurers, they were obligated to get us and our property, business and personal, out of that dangerous structure immediately into temporary housing and temporary business premises, while a structural engineer was brought in to establish the structural condition of our dwelling, none of which happened. What happened was the practice of structural engineering without a license by both adjusters for the purpose of denying us coverage for their own financial gain at our expense as policyholders. Both adjusters went on to continue weaving their web of deceit by writing emails and letters filled with out-and-out lies and deceitful manipulations of what happened. As policyholders in desperate straits, you realize quickly you have no way of countering the adjusters' misrepresentations and misbehavior, because you're a vulnerable policyholder trying to survive physically, financially, emotionally, mentally, and spiritually. You feel like you're under attack by a pack of predators. A pack because the whole claim adjustment process, from upper management levels down through the adjusters performing the hit on the policyholder, are all conspiring against the policyholder's coverage. Beyond the deadly effects of their denials of payments owed, these unethical and immoral adjusters and their managers make a mockery of the fiduciary obligation owed to the insured by the insurer. It's evil, as in the acronym EVIL, egregious violation of insurance law. To drive the point home, based on the heinous treatment we have been enduring from our two colluding insurance carriers, lo these 2.5+ years of being quote unquote adjusted, this whole matter could be easily resolved by examining the anti-fraud report demanded by the insurance commissioner of each insured operating in our state. Each year, the insurer must show the commissioner what each insurer is doing to prevent fraud committed by insurance company employees against vulnerable, unsuspecting policyholders. But RCW 48.30A.060 forbids the policyholder from seeing the anti-fraud report. This is a cynical law because if somehow the policyholder obtains a copy of that anti-fraud report, say from a sympathetic whistleblower, that anti-fraud report cannot be used in litigation. As policyholders and claimants, we the people need to be able to see that anti-fraud report, because if it is an honest report, it would decry the treatment we have received from our two colluding insurers. And if it does not, the report itself would be fraudulent. Why is this report not available to the public is a question we will address with our legislators, supported by the commissioner's current findings. Thank you for your time and attention.
Thank you for your comment. Up next, we have Mark Puzis. Mark, if you could, please unmute yourself and begin your comments.
Yeah, good afternoon. I'm assuming you all can hear me. My name is Mark Puzis, and I have no affiliation with anyone here. I have hired Harbor and Associates for a diminished value claim, actually two technically, on vehicles of mine. So that is where I've got a connection here. I worked in the car industry for a few years to pay for college. Just to give some perspective, I managed a team of highly qualified salespeople over the country. I'm very accomplished when it comes to negotiating and dealing with contracts and people and things on those lines. Unfortunately, back in September of 2021, my wife and my young son, who was 1.5 at the time, got hit by someone who ran a red light at full speed without attempting to hit their brakes, and hit my wife at the front driver's wheel and spun a Yukon Denali 110 degrees, just to kind of give you some idea of the impact. Thank God my wife and my son were okay. The lady who hit them had a concussion. I don't think she has a driver's license anymore, and she was a bit older in age and didn't see the light. But everyone was okay. I was out of town, and we had the car. We actually managed to limp it back. It was only about half a mile away from our house because we couldn't get a tow truck at the time. And we had it sent up to a very reputable dealership or repair shop in Redmond, Washington. I'm in Renton. And when they looked at it, they say, we can only get in here right now. And as soon as we have a first slot open, we'll bring you in. And so they did. And we started some claims going back and forth. I initially started the claim with the person who hit us their insurance. After about a week and a half, we were able to get an appraiser out there, and the appraiser looked at it and said, hey, your car's gone. It's totaled. So sorry to hear that. Bad news. Unfortunately, we don't have enough money to pay for your policy. Our policy limits are at $50,000, and your car's worth more than that. So we're going to have to tell you to go to your underinsured. I was disappointed in the news because the car market was difficult to buy a car in. So I worked in the car industry for years, and I knew kind of what was going on. I pay a lot of attention to cars. I understand how to repair them. I'm by no means of the level of the professionals on this call, but for an average consumer, I'm highly competent. And so I was a little disappointed in that, but I'm like, hey, probably better than repairing this thing, because the whole front end you could see was shifted over 2 full inches. The frame was bent out of whack. I mean, everything was very messed up with this car. When it went to my insurance, my underinsured, and I will very much let you guys know, I believe in overinsuring myself. I'm not the person on the planet who pays and looks for the least amount of insurance. I absolutely buy the most of everything with umbrella policies and all sorts of stuff. They said, yeah. So I told myself, I'm assuming you guys are just going to total this thing out. Let me know what the situation is. You know, I've got a comp report for the type of vehicle it is. And they came back to me and said, yeah, actually, we're not gonna total it out. We can't see a way to total it. I said, well, I don't really understand that. I mean, I see $40,000 in damage on a $50,000+ car, you know, maybe $60,000 car. Well, we only see $17,000 in damage. Okay. So I was talking directly to the adjuster at that point. I said, yeah, what's your skill level in challenging this? He goes, well, I've been doing this for 18 years. I worked at the frame shop and I've done this. And he went through all of his credentials. I'm like, oh, it's not new. Say, well, I promise you we'll be back at the table for at a minimum $30,000. So plus we're going to have months and months of time in the shop. And he said, well, I don't know what to do. We've done everything we could look at this to try and total it out, but it's really not the situation we're into right now. We can't do that. Okay. Now this is where I started to get Mike Harbor involved in his team. Great team, by the way. Helped me out just understanding the process of what goes forward. And it hit me really quick. I was talking to my wife, and I'm coming to you guys from a highly competent consumer, thinking about how my friends and the rest of the general public who don't deal in cars, don't buy cars, don't sell them often, don't repair them, don't understand, you know, the body shops, or have friends in the industry. They say, hey, who do I talk to for like a diminished value claim? Who knows what a diminished value claim is? Who understands any of this stuff? They don't get it. The average consumer has zero clue how to do this. And I worry for them, because I called Mike and he said, hey, maybe we need to talk about this, and let me hear your story. And he said, yeah, you're kind of between a rock and a hard place here. You know, there's not a ton of options you have. So I went forward with fixing the car. And it only took 9 months for the car to be fixed. And that was nothing to do with supply chain shortages or anything along those lines. It took a lot of back and forth with people to get things correct. I finally got the car back in late June, early July of 22. And I could instantly tell the vehicle was wrong. The frame had been straightened, and the alignment was off. And I still to this day feel it's a bit off. I had to take it back in there. There's obviously some punch list items. The car looked beautiful. I mean, it looked perfect. It was not correct. To the effect that I'm like, man, something's really messed up with this car. I can't quite figure it out. Like, my wife probably wouldn't know, but I know. And it turned out that multiple shocks were seized on the vehicle that no one was able to check into. Exhaust was actually busted off the vehicle because of the flex in the frame when the vehicle was hit. I don't know about metallurgy in the frame, so hopefully when they straighten everything out, it was correct. I'm not an expert in that. I do have a degree in physics, but I not specialize in metals. And I could just tell it was wrong. So we left that shop with $44,000 in damage. We've just done another $12,000 of repairs to it. I probably have another $3,000 of repairs to it still, and I'm still fighting back and forth with the insurance company. As far as underinsured and rental coverage goes into, my insurance company said, hey, you need to talk to the person who hits you, insurance company. That's okay. Well, my claim for that came out to be roughly $50,000. Just sheer odds on that wasn't calculated. And when it came out to that, they said, well, we only have $36,000. I don't understand. You didn't pay anything out. You had a $50,000 claim. Now I know I wasn't going to get above $50,000, and it was a bit above that. They said, well, here's what happens. We totaled your car out. When we totaled your car out, we only put the value for what we would have paid for the total car out after we get the salvage value back for it. And that would have came out to $36,000 and some change. So that's all we can give you. We'll give you that all. Okay. Better than nothing, but does not make me whole in my situation due to professional appraisals and loss of use of vehicles and appraisals with that. And then it goes back and forth to my insurance company, right? And my insurance company is fighting me back on everything. Like, hey, well, we know you put protective wrap on the front of your vehicle. Comically, the only spot they hit in the car was where the protective wrap was. We don't pay for that stuff to be fixed. We give you $1,000, and I hope that works for, you know, a $5,000 or $6,000 wrap job that was done on the front of the car to protect the car, to protect the interest of the insurance company. But no one tells you that type of stuff. I had no idea about anything to do with an appraisal capability for third parties. And that's something that just in general, people don't know. I'm very fortunate in the fact that I can float the value of the things I've had to have repair. What I actually had to do, take the car back, take onus of it, then find another adjuster at my old insurance company. I've now since left them and moved to the one that actually decided to do the right thing out of the gate, and start work with them to actually go and take it down to the shop whenever I had to reinspect it, had figured out exactly what issues are still wrong with this vehicle that looks beautiful but is physically incorrect. It's not right. And we've gotten 80% there, but I am many hundreds of hours into this. As I said, we're $52,000. That's before they pay me the next other $10,000 they probably owe me, and they're trying to weasel their way out of that. And I have I think $250,000 of property insurance on this vehicle, and they're just trying to weasel their way out of everything. So I think the one thing I want people to understand from this, and I really appreciate this open forum, is that the average consumer does not know enough to be taken care of or have their vehicle brought back to normal or understand how to go through this process or the energy or the time. I'm very fortunate. I work from home. I have a relatively flexible schedule. I can do this stuff, but heaven forbid someone who, goes into an office or goes into Starbucks or QFC and works every day and has to do this work and has to figure it out while they're trying to drive a car. We need insurance companies who are absolutely able to actually put us in good hands and take care of us as they're needed, and make sure that our vehicles are whole, safe, and proper, and bring us back to what we've paid for and what we've asked for and what we've agreed to contractually. I waited a long time to say all that. I hope it's heard not on deaf ears, and everyone understands that is highly challenging for most individuals to go through this process. And I thank you so much for giving me this forum to talk.
And thank you very much for your comments. Up next, we have the initials JS. Would you please state your full name for the record as you provide your comments? Thank you. Looks like JS either disconnected or declined to provide comments. Up next, we have Sherry. And we'll just wait for, maybe not. Let's see who we have here. It looks like JS is back. JS, if you could unmute yourself, state your full name for the record, and go ahead and provide us your comments. Thank you.
Can you hear me?
Yes, sure can.
Hi.
Thank you.
Sorry about that. My name is Julie Sherlock, and I don't know how I got disconnected, but I'm back. Anyways, I want to kind of tie on to what Mark was saying just in the previous, what he was talking about. I always cover myself well with insurance, extended coverages where possible, and that type of thing. And I am a consumer that has had previous experience with insurance companies and complaints in regard to not receiving reimbursement from insurance companies, both with home and auto personal property. It seems like these small claims are just exhaustive to deal with. And my heart goes out to anybody that has anything more than what I've experienced. But I know they have to hire, lawyers and that type of thing, and that's unfortunate. So in my situation, I find the process exhaustive with the insurance company's ability to deny paying on provided estimates, even though they ask for estimates. You provide 3 or 4, and they just go, oh, that's just way too much, and they want you to come up with more and that kind of thing. Continually dragging out the process, ballooning consumer man hours on simple claims without any recourse. It's just a completely exhaustive situation. And the insurance companies make it so impossible. And I believe that they do it in hopes that the consumer will just drop the whole thing and just go away. And in my experience, I've had 2 where I've actually walked away from the claim process 3 years in, doing everything they ask over, simple $2,000, $2,500 claim. And by the time I get there, I'm just done. I mean, I'm never going to get the money. They just are a piece of work. So it's just kind of frustrating. And I'm glad that I don't have anything more major that's happened to me. But I have a daughter that's currently in a claim situation. That's a small one also. Property damage on a vehicle. She's had to file complaints with the insurance of, the Office of Insurance Commissioner. And for some reason, she's kind of gotten to a point where she's receiving responses such as, oh, there's nothing more we can do. She's cited WACs that are laws that are not being followed by the insurance companies. And she continually, and I mean, she's noting that in all of the complaints and no one's doing anything. So I'm not sure what can be done, but I want to make a few statements on some of the other speakers that came on. So statements that were made by the insurance adjusters side, they want to do a fair job in getting consumers' vehicles repaired. I find that to be a complete joke. They, I believe, are trained to undercut the consumer, and just from personal experience. And they're also undercutting the auto shops because a lot of insurance or auto shops that I've gone to in the past, I want them to do work for an insurance claim, and they won't even deal with it. They won't give me an estimate. They're like, nope, we don't do that kind of thing. You're gonna have to settle the claim yourself, and then we'll come do your, then bring your car back to me, and I'll do the work for you then, and I'll give you an estimate for, for whatever. So it seems like the really reputable, good body shops and that type of thing, they're either stepping back from insurance claims or they're just shutting their doors altogether because they can't make a profit based on what the insurance companies are offering. Even with the insurance companies, they give you a check up front and they say, oh yeah, we can readjust it and that kind of thing. I've been through that process before. I've had my car worked on by one shop. Oh, we've done everything that we can do based on what the insurance company gave us. Ended up moving my car to another body shop who then was nice enough to work with the insurance company to actually fix the car. But I ended up paying money out of pocket. Now, how does that even work in the world of reality where we are paying high insurance premiums and abiding by laws ourselves as consumers, carrying insurance and that kind of thing? And then the insurance company can come in and dictate what they will and will not do, what they will and will not pay. And my heart honestly goes out to really good auto shops or body shops or even contractors working on personal property claims where they just don't get reimbursed. I don't know how they stay in business, but it is a very frustrating process to go through. And I just have to say, in the past, the one auto accident that I was talking about, I ended up contacting the insurance commissioner, but this was like back in the early 90s, and I got very good results. They stepped in, they made the insurance company stand up, even though I was some money out of pocket. Otherwise that car would have never been the same. It wasn't even tracking down the road straight. It was like going down the road at an angle. I couldn't even get an alignment on it. So but it seems like in more current situations where I've just walked away and just said, fine, just don't pay the damn claim, because, I'm just hundreds of hours into it trying to meet different contractors and stuff to come out and give me estimates and that kind of stuff. And then they say, oh, that estimate's too high. We need to do this and we need to do that. That's just a load. I just don't know how they dictate to the contractors who are doing the work, the consumer who's receiving the work, And I don't want more than what I need to make it right. I wasn't the one that wrecked it. Somebody else did, and why aren't you paying? So that part is just really an upsetting thing. Another thing that I wanted to touch on through the talks, Christian said that consumers are complaining to get something more than what is owed, and the consumer is complaining unnecessarily. I don't believe that they are. I think what the OIC is seeing is an increase, in legitimate complaints, and to say that the OIC is increasing the cost of to the insurance companies is completely false statement. That man is employed by the insurance companies. He's speaking on their behalf. And to be honest with you, the money that they're saving by not paying out claims obviously is paying his wages. So I mean, I understand that everybody has to do both sides to make it fair for a discussion, but I'm lodging my negative to that. So, and again, all of the employees that work for the insurance companies, they get paid hourly wage. Wouldn't surprise me if they get paid bonuses based on how much money they can save by having consumers not being reimbursed for whatever's wrong. Who knows how they get paid, because it seems like that they work really, really hard and spend many, many hours to confuse and frustrate the consumer, when all we want is to be treated fairly and have things repaired. So and the consumer gets no money for their time. They make it clear, oh, we don't pay wages. Well, they're getting paid. And we have to deal with the time out of our schedules on the initial accidents, the claims, the repairs. We get nothing, the adjusters get paid. Consumers don't get exact replacement rental vehicles, only compacts when maybe they use a truck for hauling things on a regular basis. That is completely unfair. And certain insurance companies don't accept estimates provided by consumers that prove their claim is being shorted. They only go by whatever the camera or the AI or whatever they're using to prove the damages. And they say, oh, well, take your car in, we'll pay any shortage, we'll work with the body shop. But they're not going by the RCW laws of Washington State. The idea that something has to be halfway through the repair process and so they can negotiate hours and time is ludicrous. They should have to cut a check from the very get-go with a very legitimate estimate of the repairs. And that's just how it has been that way in the past. I don't see what the problem is these days. It just, things seems to get more and more convoluted. I wanted to say on, you had wanted to cut people short after Christian got done. I just kind of putting out my little thing that I didn't appreciate after Christian spoke so long that you said you were going over time, and if the balance of the speakers could keep everything shorter to make up time, I didn't really appreciate that, because it seemed like the balance of the speakers were not related to the insurance company, so more on the consumer side. So as far as what Aaron Schulenberg had, he represents consumers' plight exactly. I think he's spot on. Big business insurance companies have made a business out of manipulating consumers by any means necessary, and we need way more support than the OIC is offering when they say there is nothing that they can do other than to encourage the insurance company to do the right thing. Why do we have laws? That just doesn't even make any sense to me. Washington State, Washington State is paying for agencies on a regular basis to protect consumers. We pass laws to protect consumers. We have the best consumer protection laws, so was said in these talks, but we're still not being protected by a long shot. I'm not sure what the disconnect is there. I can appreciate John Walker's interesting perspective on adjusters position in the insurance claim process, and having independent adjusters to remain unbiased, not working for insurance, not working for consumer, but for the real cost of the claims. But I'm not sure who would oversee the independent adjusters, and who would pay them, both wages or we could even go into social hours and vacation perks, because we all know that independent type resources are not always independent. They can be corrupt on any level, and we know insurance companies are pretty powerful people. So again, Washington State might be the best consumer or have the best consumer legislation of any state, but it's not really being enforced. If the WACs were being enforced, you'd be seeing, or you wouldn't be seeing, this uptick in complaints. And I think they're all justified. And as Roger pointed out, the insurance companies would stop manipulating, shortchanging the consumer if they were fined, readily fined. They would then use the money that they're would end up paying for fines back into the claims and truly reimburse the consumer for their losses. Justin and Jeff, when they were speaking about the body shops and all of the different survey type stuff that they did, I thought they were spot on. It's taking way more man hours and cost to get reimbursement, and you know, at some point the body shops, I think they give up. They just finish the job because they know that going back after the insurance company, and they're, you know, spending days and weeks and however long to get resolution to their payment, to get additional funds to finish these jobs. It's very labor intensive on their part. So I wish, like Mike Harbour said, I wish the consumer, or, you know, the commissioner would take the increased complaints to heart and enforce the current laws that exist and stop letting insurance company take advantage. The complaints have grown to its current level because the complaints are going unresolved. And the insurance companies have used that against the consumer, knowing that the office isn't doing a whole lot. So the smaller claims in particular, I think receive the worst abuse by the insurance company, because they know that people can't afford to hire an attorney or anything to represent their case, or even if they could find one for property damage, it would just be so costly. It would go against, you know, it wouldn't pan out, you know, financially pan out for them. It'd just be more costly, and they wouldn't get reimbursed for attorney's fees. So that's my take on what was said in the meeting. Also, I kind of just want to take a second and ask, or not even ask, just lodge a statement that I don't really know how this meeting was announced. I heard it by word of mouth, and I'm thankful for that. But I just want to say that I found it kind of odd that it was held during the week when most people were, you know, at work. So I guess I'm a little confused by that, because if you want more consumer input on what exactly the problems are, I'm thankful for the people that are here speaking on behalf of all of us and the problems that we are having with insurance companies. But really, I think we would see a lot more people involved if we could do evening meeting or something to that to reach more people. So thank you very much for your time. I appreciate it.
And thank you for your comments. Up next, we have Adrian Delgado.
I can't hear anything.
Adrian, please feel free to unmute yourself and provide your comment.
Hi, I just want to mic check before I start speaking.
I hear you fine. Thank you.
Hi, guys. I want to be appreciative for this forum here. I've heard to everyone's testimony, and I agree with everyone's word. I just want to hit a few key points, not necessarily reiterate what has been said. But I've heard a pattern already of, just several practices of bad faith, with a lot of examples that were said in this forum alone. And the ones that I've read alone online it's pretty much all the same thing going on. Underpayment of repair costs, misrepresentation of labor rates, which I'm very huge on labor rates. Obstruction of the appraisal process, misrepresentation of the legal obligations, delays and stuff like that, lack of communication. And I guess this is for all the carriers, but their practices reveal, a pattern of prioritizing their own interests over those of their customers. Instead of acting in the best interest of the policyholder, they have chosen to minimize their own financial liability at the expense of the insured. And I'm saying that from a consumer in Washington State. They left me with the open bill due to the shop of $9,000. I don't know about you guys, but $9,000 for me that's a lot of money. This is evident in their undervaluing of repair costs, opting for their own lower estimates rather than paying the full amount quoted by certified repair shops. They have shown lack of effort to fully indemnify the policyholder, and that goes with the line of Washington's the arranger rule before seeking to recoup costs from at-fault party insurance. And me, when that happened, I was very uninformed. I could say that I'm more informed now, but I had an accident 15 months ago. I had to figure out how all this worked. What's appraisal cost? How does this all work? And it's all about determining loss. And so, with communication, all that can go on and on and on, but it's a headache. It's a headache, and they just try to wear consumers out. And I just don't think that's fair. It was a simple dispute. It could have been a straightforward process with a clear resolution. But the situation became unnecessarily complex and, convoluted, especially when confronted with informed and educated consumers. I'm sure that once you guys started the appraisal process and people in this forum, they just start hitting with excuses. Oh, this, oh, that. Oh, that person is not here no more. I had direct experience of them telling me, oh, said person is no longer with us. And it just causes more delay on top of more delays on top of more delays. And it's just outrageous on how these insurance companies, not just to us, but do this times a million. Who knows how many consumers go through this, or at least the ones that have an idea to navigate on seeking fair costs of repairs. And so I really appreciate this forum. I've heard a lot of key points in this forum, and it's very understandable. The insurances, they essentially, it sounds like they're just shirking their responsibilities, acting primarily to protect their own financial position. They have effectively shifted the financial burden of the accident onto the policyholder. Just like how JS was saying, how many people were saying, how is it that we're paying monthly premiums for in case something to happen, and then that something happens and they don't want to pay? It's very outrageous. It's very outrageous. With the photo thing and the photo praising, that shouldn't even be allowed. That's very inappropriate. That's very immature. The approach to appraisal process, it just further underscores this bias of them prioritizing their own interests, by using out of area appraisers who never physically inspected the vehicle and or by obstructing and delaying the appraisal process, they have attempted to further their own financial interests, prolonging the claim resolution, leaving the policyholder without use of their vehicle. And most of the time, it's policyholders that don't really know how to navigate. It just, I hate to say it, but that shouldn't be allowed. Writing estimates off of a photo, it just sounds very inappropriate, me even saying that. So that's all I wanted to say, just expressing all the key points off of my experience as a consumer. I completely heard every and each one of you guys in this forum so far. And again, I guess my only conclusion is to keep your gas on the pedal, stay informed, keep fighting, and yeah, it's just doing the right thing. Thank you very much.
Thank you very much for your comments. Up next, we have Alan Baum. Alan, if you could, unmute yourself and go ahead and begin providing your comments. Thank you.
Yes, thank you very much, David. My name is Alan. I work for a contractor called Heritage Restoration. We service Thurston County, Pierce County, Lewis County, and beyond a little bit. I have just a couple of things to talk about briefly. The first is that, firstly, I really appreciate you putting this on. I know that a lot of this was focused on the auto industry, and I just wanted to offer a little bit of insight on the construction industry. I see these estimates written in the auto industry for $1,200 repairs, which ended up being $19,000, and that's based off of photos. I can safely say that in the construction industry, field adjusters are going out there and they're writing low estimates as well. There's one in particular, a customer that I'm working with. They had a tree impact back in November. They're on their 15th desk adjuster, and they've had 3 field adjusters go out there, and between the 3 field adjusters, they determined about a $20,000 in repairs for what's closer to about $140,000 in repairs. That is people in the field putting eyes on the project and writing an estimate that is, ridiculously low. Further to that, the insurance company in this case also threatened to stop their additional living expenses because repairs weren't getting started. Repairs can't be started for $20,000 when engineering fees alone cost $10,000. And, a tree took off a third of their house back in November. We are still in the process of negotiating the claim and coming up with a agreed upon scope. But that's just an example of the adjusters themselves being trained to write these estimates that are just way too low. Another customer that always comes to mind would be the case of an 89-year-old woman with a walker. She had a water loss, and when I met her, she had a $1,200 check in hand and a letter that stated the claim is now closed. She could not access her bathroom because the floor was so swollen, and we went in and we helped her out. The cost of repairs ended up being closer to $20,000, but this is somebody that's been paying premiums for close to 60 years. And somebody had come to her house and based on a visual inspection decided that $1,200 was more than sufficient to return her to pre-loss. Another case with ALE, I have a customer that's has been living in a hotel. The carrier will not help them find a proper house or anything like that, or an apartment to live in. So they've been living in a hotel, and the wife is actually, she works in medical scheduling. So she needs to have a secured internet connection in order to schedule and do her job. Because the hotel does not provide that, her employment has been threatened to a point where the customers call me up and says, I don't care if it's mismatching. I don't care to be returned to pre-loss. Please just do whatever you can to put my house back together enough so I can live back there again so my wife doesn't lose her job. This is after 8 months of them living in a hotel because the carrier will not agree to a scope or a cost of repairs that is incredibly reasonable for this market. That being said, adjusters being trained to reduce claims, they're also not sufficiently trained on what a construction repair actually looks like. As other people have previously said, they've got about a year of experience sitting at their desk. I believe Mr. Roger Housen said that. Not only do they have such short experience adjusting, they have zero experience in the field. And so they can't actually write a scope of work that is probably up to code or includes all the details necessary to return to pre-loss. I've spoken to many of these adjusters, and I know that many of them are terribly overworked as well. Some of them are working 80+ hours a week on a base salary, and that's unfair to them. I have one adjuster that's told me that it's inhumane the way they're being treated. Now, I have enough empathy for people like that. They also choose to go into that profession, and it is a tough one, you know, to sit there and deny to customers constantly and having to deal with frustrated people like everyone on this call here today, I feel like. But that's the insurance company is not only treating consumers poorly, they're treating their employees poorly, and that should be noted as well. The last point I want to talk about, trying to keep this short again, are the labor rates. So as a contractor, if we cannot just supply a basic estimate for repairs, the only way to really get anything approved is by using a software that I'm sure some of people at the OIC are familiar with called Xactimate. Now, Xactimate issues a price list every month, and that price list is not warranted by Xactimate. Their license agreement specifically states that it's just data that's compiled in the field, and that they can't warrant it. They can't warrant the price data, and therefore it's up to the user to ensure that the costs are accurate. Now, some of those costs come down to a labor rate of about $24 an hour for a skilled framer, $29 an hour for a finished carpenter. I don't know if anyone knows, but there's about three people retiring in the field for every one person coming into the field as a skilled tradesperson. So that means that there is not a line out the door of people that are willing to take a job for $24 an hour to be a framer or a carpenter. This is a market that's in dire need of people that need to get into it, and they need to be paid a fair wage for the skill of work that they do. We have employees that have worked with us for 15 to 20 years. As such, we can't pay them $24 an hour and expect them to hang about. However, the carrier refuses to pay anything above the Xactimate rates. And so we're forced to sit and wait until they can agree to it or come up with other sort of plans like additional hours, like previously mentioned by another speaker on this. But it's incredibly frustrating for the consumers, for the homeowners. They have to sit around and wait until the adjuster finally can get some sort of approval from upper management to say, fine, we'll just agree to your cost of repairs, because we simply just can't reduce the pay of our workers and expect them to hang around and for us to stay in business long term. There are many problems going on with the insurance companies. I've seen a terrible decrease in how they handle their claims. I'm not seeing employees in the field. I'm just seeing third-party adjusters. Most of them have got their license here in Washington, probably within the last month to 2 months. And surprisingly, there is no contact information tied to their license on the OIC website. I actually emailed someone at the OIC office a couple of weeks ago about this, because it's surprising that these people are coming in from out of state, getting their license, going and adjusting claims in the field and then disappearing, and they're not even employed or tied to the carriers. So that's certainly something that's going on as well that you guys should be made aware of. Once again, thank you very much for your time today. Thank you very much for putting this on. I do think the OIC needs to get a little bit, get a bit more stern and start enforcing the WAC laws, because many of the customers that I have, they've had fires 3 months ago and they haven't seen a penny on it yet. And that's just not right. So they're all stressed out. It's a lot of stress for them, and they just want to get their homes back. So once again, thank you very much.
Thank you very much for your comments. Just as a reminder, today we're also accepting written comments through August 15th at the email address policy@oic.wa.gov. And just a reminder for people providing comments, we're very interested in your personal experiences. If you can, please describe the details of your experience without naming any individual company. Also know that any consumer may file a complaint through our website at insurance.wa.gov. And however, please note that the OIC will not be commenting today on any investigation or specific complaints we may have received. Next, we have with us Petra Walker. If you could, go ahead and provide comments. Thank you.
Yes, thank you to Mike Krautler and to OIC for this workshop. I was hit very heavy by another insured person. I brought the car to the repair shop and they immediately saw I cannot drive this car anymore, and they kept it there. They repaired it. The insurance company paid for it. There was some communication problems with the insurance company, but I was able to pick it up, and the auto body shop strongly recommended that I get in touch with Mike Harbor Appraisal. I did, and I'm very grateful for that recommendation. From all what I heard today is insurance company are really not in the business to take care of us. We pay the dues and get very little. But one panelist made a comment about you get what you pay for. Yeah, if those people who go for a cheap or inexpensive insurance, they should then pay the difference. The insurance company doesn't want to pay. They should deal with that, but most cases they don't. So where is consumer protection? Is that an oxymoron? I'm really wondering about it. So my claim is about diminished value, and the insurance company has an appraisal, but an out-of-state appraisal. I wonder how this is even possible. Can they go to Timbuktu to get an appraisal? Isn't there a limit? Shouldn't it be right here and there where the car is located? That's one of the questions I had. My car was warped, so the frame was warped, and that is something that cannot be fixed to the point that it is back to normal. So that's my comment, my question, and I do feel that the insurance companies are talented in prolonging the process and trying to outmaneuver us to get what we deserve. Thank you much. That's it.
Thank you very much for your comments. Up next, we will have Crystal Engelhart Malang. And Crystal, if you could, please unmute yourself and provide your comments. Thank you. Crystal, if you could hear us, go ahead and unmute and go ahead and provide comments. Thank you.
Can you hear me?
Sure can. Thank you very much.
I don't have much time, but I stayed on because I want to express something. I had a horrible experience with the insurance company, and it's still another year before it will be 3 years. But it was shortly, I lost my husband tragically, and the insurance company was well and also aware of this. It wasn't because of the accident I was in. But what I was infuriated by was the way that I was treated. I drove with the person that picked the car up off the freeway that took it back to the junkyard or whatever they were taking it to. And, you know, the one thing that caught me off surprise right away, that guy's on the phone, he's got 2 callers and he's talking about my car and the other car that's been in an accident that's coming. And second of all, what happened is they took, my car was up there, not even probably 24 hours. They moved my car from a wrecking yard that was like probably only about, I would say 10 minutes, maybe 7 minutes from where the accident was. It was 20 minutes from where I live. And they took my car hostage for almost 3 months to a wrecking yard that was clear up north. That was a round trip. It was 174 mile round trip if I wanted to go up there to where the car was at to try to get belongings or whatever. They knew that I said from the beginning, because there was a faulty, I took because the car I hit was a Tesla, and you know, they've got videos. And so anyway, I took the video over to Honda where I bought my car from the man and the person who had sold me the car, and showed him. I said, you know, what doesn't make any sense to me is that one of the reasons why I bought the Honda was because it has a safety feature built in, to where if something happens, you get too close to a type of vehicle or whatever, it immediately slows down. Okay. And he looked at it and he said to me too, I don't know why that feature never kicked in. I'm not saying I'm not responsible for this accident, but I also said to the insurance company, I want that accident investigated, because I think and I said it to the state patrolman the minute he showed up at the site. I said, I think that car pulled out in front of me, because I was on the way over on the inner lane, and that's where we ended up having the accident. And anyway, it was nothing. I can't even tell you the nightmare that my insurance company has put me in, to the point of the amount of harassment calls on me, threatening me, telling me that I have to sign these document saying that to close my case, and that they will if I ended up if I needed medical help or something like that they could always reopen it. And I just can't even tell you the nightmare. But the other thing that I witnessed too, with my daughter, who was in an accident with her kids, she was taking them to a chiropractor, and the doctors themselves, the insurance companies have the treating doctors themselves presenting documents to them to sign and close the claims with the insurance companies. And I told the chiropractor, that's contractual law, and you're not an attorney, you're a doctor. Because what happened to my daughter, unfortunately, my son-in-law went in there and took the 2 children, and you know, he's kind of easy guy, and my daughter handles most of the business, and he signed it. And it took quite a while, but it got back open, and those children are still in some need of treatment in which they're going to. And the insurance companies, they've turned hostage. But what they did with holding my car up from me and wouldn't let me have it back. And they knew the main reason why I was also wanting that car. And I even got pictures to prove it. Honda had a recall on their airbags at that time in 2016. And the thing that hurt me the most, the airbag went off, and they have these little metal things hanging on the end of them. And it knocked me right between the eyes and knocked me out. And so I told farmers, I said, Honda told me in all insurance policies concerning auto accidents you have a right to ask them to investigate that. And they would not. They said, look you have a $1.6 million policy, and we just want this other driver to go away. We don't care if he pulled out in front of you. We don't care about any of that. Flat out, they told me that 2 days after the accident happened, when I had the interview with them. Have we been cut off?
No, you were briefly not speaking,
What is going on?
but we heard about your incident, and please go ahead if you have more to comment.
Hello? I can't
Yes,
hear.
go ahead. We can hear
Hello?
you.
I can't hear you very well. Were you able to hear me what I said, sir?
Yes, very
That's
well.
what's important. That's
We
what's
did.
important. I want to speak out, and I'm going to be 70 years old next this September, and I also felt very discriminated on in my position that I was in by being someone who had just recently lost somebody tragically, and also because of my age. They were like piranhas coming after me.
We can hear you. Would you have anything else to comment on?
I think we've got a bad connection. We're getting cut off.
Well, thank you very much for your comments. We heard the far majority of things that you said there. Thank you. Up next is Scott Hedges. Scott, if you could, please unmute yourself and provide comment.
Yeah, my name is Scott Hedges. I'm a licensed public adjuster in Washington State, and I own Precision Public Adjusting in Southwest Washington. And I didn't necessarily plan to speak today, but I just felt compelled to after hearing some of the statements and comments, and just to give a little background about myself. I've been in the disaster restoration and insurance industry for 2 decades now. I was a large loss claims adjuster for a well-known carrier for about half that time, and then I've spent the other half of that time on the vendor side as a disaster restoration manager for a nationally recognized mitigation company, an operations manager, project manager, estimator for 2 different contractors, one a preferred contractor, one a non-preferred contractor. And I've also been an insured. I've had a significant water loss to a rental property. My wife and my daughter were involved in a rear-end car accident last October. And so first, I just wanted to say thank you to anybody that's still on the call or anybody that shared today. I know that it's really hard to share, and it's one of those things that you've probably already told a million times to multiple adjusters and multiple individuals, and it can just be so frustrating to have to repeat your situation and your anguish over and over again. So I really do appreciate you guys sharing and letting other people just get a window on what you've been dealing with. And then also I do want to thank the Insurance Commissioner's Office for this forum, because I think it's just so critical that you do hear these stories. Statistics are statistics, and as we kind of saw in the beginning of this workshop, it's easy to view statistics in different ways and manipulate those numbers, and the reality is these are real stories, real people, and it's just really unfortunate that people aren't taking more seriously, and that there's not somebody at these insurance companies that either wants to listen or has the time to listen. One of the things that I think Adam touched on, that not every one of these adjusters that you're dealing with from these insurance companies has bad intentions. A lot of them are kind of set up to fail from the beginning. And so what I really wanted to talk about more than anything was just some kind of insight into why some of this is occurring, and then a couple of recommendations that I think that would really help resolve.
And Scott, I'm sorry to interrupt, but are you able to speak up just a little bit? It's a little low volume.
Sure. Yeah.
Thank you.
I can increase the auto as well. So, so first of all, I just want people to understand that, one of the things that insurance companies, when they had bad insurance, bad faith claims became treble damages back in 2007, a lot of insurance companies realized that, if they're practicing any of these unfair claim settlement practices and there's intention involved, that's usually going to be found very negatively against them. If intent is not easily established, it's a little harder for that to go through. And I've been involved in many legal claims and appraisals. And so, you know, there's been a pretty concerted effort from what I've witnessed since about 2007, 2008, where a lot of insurance companies are you know, intentionally understaffing, under training, and overworking the adjusters that they do have, so that even if they do want to try to handle claims the right way, they don't have the opportunity to. They're basically, you know, like I think it might have been Adam mentioned, but you know, most adjusters put in at least 60 hours a week, and they're only getting compensated for 40, and they're usually salaried. They don't typically get paid overtime. So, you know, when you don't give them the time and the resources to do their job well, it should be expected that negative results are going to occur. And then of course you've got some that also just don't really care and are problematic in other ways. And so, you know, that to me is one of the biggest issues, is that the people that are supposed to be helping you, the claims adjusters, are not able to, even if they want to, and that's a big issue right there. And the other piece that goes along with that is, and many people brought this up, is enforcement by the OIC. You know, one of the things that I've heard multiple times is, you know, insurance company, you know, told me to go to appraisal, compel me to go to appraisal. Compelling a first party claimant to initiate or submit to litigation is an unfair claim settlement practice. And when I was an adjuster eons ago, appraisal was a death knell. You never wanted to go to appraisal. You wanted to avoid appraisal at all costs. And I think because there's been a very lax enforcement by the insurance commissioner's office on some of these policies, and the insurance companies realize that, they're saying, hey, yeah, we'll go do this. You know, they're basically pushing unfair claim settlement practices because there's very little recourse and there's not a lot of you know, much more than the hand slap. And I will disagree with Roger in that, while I agree that, you know, a $250 fine to a multi-billion-dollar insurance company is not a big deal, if there is a record that a complaint was filed and found to be you know, found to be legitimate, and a fine is due, that certainly gets a lot more attorneys interested in the possibility of a bad faith claim against the carrier. And so, you know, even though it seems like those monetary fines are minimal, I think it also does kind of establish intent, and that's a really important factor when you get to the point of hiring an attorney and being involved in, you know, some of the situations that many of the folks on this call seem to be involved with. And so what's the best way to fix it, right? Because obviously we could all spend hours and hours with horror stories and what we've lived. I think there's a couple of things that I recommend that would be very critical to addressing some of these issues. One is, of course, enforcement and insurance, you know, the insurance commission office, you know, penalizing these carriers when they are, you know, basically doing any of these unfair claim settlement practices. That's first and foremost. But then second is education. And I've heard multiple people throughout this entire process talk about, you know, insureds or homeowners or automobile drivers not knowing the process. And I think the education on the insurance side is also lacking significantly for some of the reasons I touched on. And so, you know, one of the things that I think would be absolutely critical is requiring insurers to have certain ratios for adjusters to claims received. When I started in claims back in the early 2000s, you know, I typically would get no more than, you know, one claim a week for the large losses I was handling. And I had to travel to every single one, and I carried around a pending of roughly 30 open claims at any given time. When I left the insurance side, you know, about 10 years later, I was getting 7 to 10 claims a week, and I was carrying a pending of over 75. And that's for someone that's been doing it a long time and knows what they're doing and can work through stuff. And so I think if you know, there was laws that said, hey, if you get X number of claims per year on average, you need to have X number of adjusters to handle those claims in efficient and proper fashion. I think that's number one. Number two is, I think anytime a claim is filed, the insurer should be required to send out a insurance commissioner approved worksheet that says what the role of everybody involved is going to be, whether that's the claims person that's taking the claim, their agent, a public adjuster, independent adjuster, staff adjuster, contractor, both preferred and non-preferred. This should be something that's explained to everybody. The appraisal process, some of the stuff that you put up, Mr. Fort, in the very beginning of this workshop should be immediately emailed to someone that's been involved in a claim, whether it's an auto claim or a homeowner's claim. There's certain aspects of their policy that they need to be aware of, and they also need to know who they can trust and who they can't. I mean, most people don't realize that insurance agents don't really understand anything about claims. They sell policies, and so that knowing who does what in their area of expertise is very important, and it's an easy thing to do. Put a document together, require every insurer to put it out there, and there's no ambiguity about who as a homeowner do I need to listen to when it comes to any aspect of my claim or any aspect of the filing of my claim. The other part is another thing that I think is really critical and a lot of people don't understand is that staff adjusters, insurance company adjusters in Washington State are not required to have a license. Public adjusters are required to have a license. Independent adjusters are required to have a license. We're also required to do regular continuing education, and we're required to either do a lengthy, I'm blanking on the word, apprentice program, or you need to have something like I have a property claim law specialist designation, which is a lengthy course and a costly course to go through and take. We should not be allowing the insurers to self-regulate what training their staff adjusters are receiving. They should be required to go through the exact same training and the exact same requirements that a public adjuster or independent adjuster should go through. There's no excuse to have an adjuster with less than years experience trying to handle a $500,000 fire loss. And I can tell you, day in and day out, I am constantly educating adjusters that I'm supposed to be negotiating with about the basics of construction, the difference between a rafter and a truss, or proper smoke sealing methods, or how to set up a drying chamber. These are things that an adjuster should know, and that the general public automatically assumes that their staff adjuster knows. And the reality is that's not the case. And then the very last thing that I think is actually two more things. One more thing on that. The other thing is CE. If a staff adjuster for the insurance company is handling auto claims, they should have to go sit in the shop and help work on cars for a couple hours every 2 years. If they're a adjuster that handles property claims, they should be going out and doing some demo, doing some painting, doing some roofing, getting experience hands-on so they can see what those jobs really do entail. It is so easy from a desk to think you understand what detaching and resetting a countertop or replacing a tire or a wheel on a car is all about. It's a lot different than doing it or watching somebody that knows what they're doing do it. And I think that is something that should just be mandatory. I think CE requirements for staff adjusters, again, should align with what is for public adjusters and independent adjusters. And then the last thing that just needs to go away completely is what I call it, but shadow claims handling. There's less and less authority. When I was an adjuster in my early 20s, I'd carry around $75,000 of payment authority, ability to settle that amount of a claim without talking to my manager, without talking to other people, because they've trained me, they trust me, they give me the ability to do that. Very few adjusters have more than $2,500 in payment authority these days, even large loss adjusters, general adjusters. And the truth is, you're not really dealing with your staff adjuster, you're dealing with your staff adjuster's boss and their boss, and maybe a legal team and an auditing team. And they're nameless, faceless entities that are the ones that make these statements of, well, that's just our company policy, or that's our estimating guideline. And that's not fair to the staff adjuster that's having to be the whipping post for all those decisions, right, wrong, or indifferent. And it also doesn't allow for anybody to hold the insurer accountable for decisions that are being made. And so if someone's going to be involved in the decision-making process outside of the staff adjuster, their name, information, contact info should be included on all of these claim settlement correspondences, whether it's a payment letter or a denial letter. People have a right to know who is truly adjusting and settling their claim. And I think it's unconscionable the amount of times that I've had an adjuster tell me, yeah, I totally agree with this. I think this needs to happen. And all of a sudden they change their mind a week later and come back and say, oh, we can't cover that. And I know that it's because an auditor or a boss or a manager said, oh no, we're not going to do that. We can't do that. You need to go tell them we're not going to agree to that. And again, that thing just can't happen. So I don't want to take much more time. We've all been on here for a very long time. I'm going to send these written comments to the Insurance Commission office as well, and I'd be more than happy to talk to more with the Insurance Commission office in more detail if they want more specific examples and names of carriers and adjusters. But it needs to be fixed, and I do really applaud the OIC for having this workshop, and I hope this becomes a regular thing that they do often and give people a chance to really express their frustrations and help refine this process. So thank you so much, everybody, for your time.
And thank you for your comments. Up next, we have Kevin House. Kevin, if you could unmute and go ahead and begin providing comment. Thank you.
Okay, David, can you hear me?
Yes, clearly.
Okay. Yeah, hi, my name's Kevin House. I'm a independent auto body shop owner in Tacoma, Washington. I been in the industry about 40 years, and about 18 years ago, we opened Center Collision here in Tacoma. And I just want to echo really what Erica Eversman, Mike Harbour, Jeff Butler, Justin Lewis, and Josh Green have said. To be honest with you, I don't have anything brand new to bring to the table here, but I do want to let everybody know that they're spot on everything that they said. These things are real problems, and you know, I love the industry. I would like to see the industry improve. I'm not here just to, you know, it's an easy target just to beat up insurance companies. They obviously have their downfalls, and we do our very best to work with them and, you know, keep the customer number one is our priority. But we are an independent auto body shop for a reason. You know, we had a choice. There was a fork in the road years ago where we could have gone signed up with the insurance companies and been on their contracts, which would have guaranteed us lots of work. Or we go the honestly a little more difficult route of being independent. But you know, one of our core values in our company is that we repair vehicles to safety standards, not to price. So we really don't care how much it costs to repair a vehicle. If it's going to be repaired, it should be repaired safe enough that I would put my mom in the car. So if it can't meet those standards, we really don't want to be involved with it. So when we came to the fork of the road, we decided to become an independent auto body shop and not have any influence from insurance companies that would potentially steer us to do things that we didn't want to do. So a couple points I want to make, and I just want to reiterate, I've heard talk about the labor rate survey. I'm just going to call it as it is. It's 100% bogus. You know, insurance companies have used that as a weapon against the independent auto body shops for a long time. They survey their own contracted shops, and then they use that against us independent shops to act like that's a standard, which it's not. So I'm just going to say it's it's something that cannot be trusted or believed at all. And when we've asked for information, how they've come up with these solutions or these numbers, you know, it's always proprietary, and that information is not available to us. So, and that creates a problem for our whole industry. I mean, if I've had talks with people that are in service industries, and you know, when they find out what our hourly rate is, it's just embarrassingly funny. that, you know, a business can, in today's market, operate a business at rates of like low $60 an hour as a shop rate, where every other industry, service industry around, mechanical, plumber, electrician, anybody that's a service industry, oh, they're 175 or, you know, 250 or more. So that makes it tough for hiring people. I mean, who wants to spend $40,000 and start off at 25 bucks an hour? You know, it's a tough sale. So I think that's a huge problem for our industry, and I'd like to see something done about it. I know there's a lot of things that have been discussed today, and obviously nothing's gonna, you know, happen overnight. But I just want to put my 2 cents in that these things are real. I want to back up what, you know, like I named the people already, what they've already said, and I'm on their side. Another thing is preventable delays are a real problem. There are delays that happen, then there's also preventable delays. It seems that our cycle time is getting longer and longer due to things that, well, one of them is just resubmitting insurance estimates. Well, actually, at that point, they're repair plans. The car's been blueprinted, so this is an actual repair plan on the car. So when that's submitted, that's really what it's going to take to fix the car. It's not a guess or estimate at that point. So when we have to go back and forth and explain, you know, educate the insurance adjusters on why these repair procedures are necessary, it's just unnecessary, to be honest with you. They should be qualified and have an understanding of the repair procedures, which we use as a guideline, more like a Bible, really, the OEM procedure. So if the OEM procedures call for this repair process, that's the way we do it. And we've been told that we're the only ones in town that charge for that. We're the only ones that do it. We hear it on a regular basis, and that's okay. It's frustrating that there are that many other shops that are not using the repair procedures, and it should, you know, that it's such a foreign thing for them to hear of some of the repair procedures that we follow. But we don't base our repairs on how other shops operate their business. We are independent, and we serve our customers, and they're our number one concern. Not price, or not trying to appease the insurance company, but making sure the car is going to be safe and put back on the road. I do have a comment. Adrian said he was against the photo estimating. I'm not 100% against it, but I think it needs to be put in perspective. A photo estimate, you can never count on that thing for anything more than, you know, is it a scratch or is this a train wreck? So if you're trying to write an estimate off a photo, just give it up. It isn't going to happen. You've got to disassemble the car and see what's underneath it and do an actual repair plan. So by all means, a photo estimate can be used, but it has to be put in perspective, and it should not be considered accurate beyond just what you can see there. And so that's really about it. Thanks for letting me be on the forum, and I appreciate all the comments that have been made today.
Thank you very much, Kevin, for your comments. Up next, Jeff Butler. Mr. Butler, you already presented, so I'm assuming this is with a different organization. If you could, please state your full name and the business affiliation you're with for this. Thank you.
Great, thank you. Just checking audio, and I don't see a video. So just confirm the audio if you would.
Yes, we have audio and video.
Oh, great. All right, thank you. David, my testimony here is as Collision Consulting of Washington. I work as an automobile damage appraiser, and the last 2 years I've worked as a public insurance adjuster representing consumers all over the state of Washington. I have 3 points to make in this segment of the presentation. I'll be brief, and I'll keep my testimony to 5 minutes. The first thing I want to point out is that the federal regulations, NHTSA, the National Highway Transportation and Safety Administration, that organization was founded in 1970. A federal agency to work with manufacturers to make safer cars. They've been massively successful, and highway fatalities have been reduced like by 80-something% or some really huge number. I presented this information to the legislature in 2009 when we first started taking legislative action. That's all well and good, but here's what's missing. There are no rules nationally or locally in Washington state that have those really high quality safe cars repaired to the manufacturer's specification that the federal regulations require. So it's a huge missing that we don't have safety standards weaved into our regulations or laws that follow the NHTSA standards. The second point I want to make is regarding consumer protection. In Washington state, there's a consumer protection standard, but just for homeowners. Washington Administrative Code 284-20-010 is called the Standard Fire Policy. And the Standard Fire Policy is Washington law that protects homeowners, because back in 1963, when this regulation was founded, homes cost between $15,000 and $30,000. Simple read of that regulation is about consumer protection. And if during the claims adjustment process, that the standard fire policy provides more benefit than the policy the insurer had issued to the policyholder, the standard fire policy will rule. That's great, but it only applies to homeowners claims. We need a standard auto policy for Washington. Cars cost $25,000 to upwards of $100,000. It's high time that we have consumer protection regulation with standard insurance policies. And I say that because insurance companies are rewriting their insurance policies. The 1943 New York Fire and Casualty Standard Fire Policy, which was the standard bearer policy for property and casualty claims, that doesn't exist in auto insurance anymore. That's been completely rewritten. And alarmingly, the Office of Insurance Commissioner doesn't have authority to regulate the language in the collision, comprehensive, and appraisal section in those policies. The legislature hasn't given them that authority. I've asked. So we've got a really big hole in our consumer protection rules in Washington state. It's been said Washington has some of the best consumer protection law in the country. I disagree with that standard. The CPA and the IFCA statutes are good, but no lawyer is going to take a $2,000, $5,000, even $10,000 vehicle short pay case or under appraised value case into litigation. It's too costly, it's too expensive, and the rules allow gamesmanship for insurers. So there's no consumer protection in Washington state on point. And this is law in Oregon, right next door. Oregon has a very solid right to appraisal law. We have mirrored that in our attempts to pass legislation. We're just not able to get past the myriad of insurance lobbyists that have influenced the legislature, and we're not able to pass good quality insurance protection law. The last point I'd like to make specifically about the right to appraisal process. I performed hundreds of appraisals, whether it's a cost of repairs appraisal based on an insurance company's short photo estimate, or a total loss where the consumer believes their vehicle is worth more than their settlement. I have never seen the amount of pushback, the amount of gamesmanship and difficulty in the appraisal process that I have in the last 2 years. I've been writing appraisals for quite a long time. I'm a qualified subject matter vehicle repair expert and vehicle appraiser, and I'm dealing with adjusters, appraisers hired by insurers that are unqualified. They don't know what they're doing regarding repairing vehicles. They might have been adjusters for a long time, but they are no means qualified subject matter vehicle repair experts. The kinds of issues I'm running into with the appraisal clause is significant delays using out of area appraisers, significant delays in choosing the mediator called an umpire, and that the policies have been rewritten such that choosing an umpire is there's no longer a standard in the policy that allows that to be resolved if the appraisers cannot choose one. In other words, some insurers can issue policies with appraisal provisions that allow gamesmanship and stalemating the appraisal process. They want to work the appraiser on the consumer side so hard it becomes uneconomically viable to take a case under the appraisal clause for the consumer, because I'm paid by the hour. And when I spend hours and hours and hours just arguing with a insurance appraiser to even put together their own appraisal, to choose an umpire, and endless arguments about meaningless stuff and false rules that are being presented to me as the standard, it's gaming out the appraisal process and making it hard for consumers to be made whole. that is the extent of my testimony. Appreciate the Office of Insurance Commissioner being able to provide this forum today for my testimony. Thank you.
And thank you very much for your comments today. Up next, Katie B. Katie, if you would unmute yourself and provide your full name for the record. Thank you so much.
Hi, can you hear me?
Yes.
All right. My name is Katie Brower. Thankful to be here today to talk about my experiences. I just want to say, so during the opening of the workshop, I was a little bit displeased by the explanation of the first speaker after Mr. Kreidler, that the main issues are that insurance companies are suffering from a post-COVID economy and naming supply issues as the problem. I feel that's a little bit of conjecture and sounds like a typical excuse. The speakers and consumers that have presented here, which I thank all of them for being here, did a much better job bringing to light what the actual data, what's going on. I think the real problem with satisfaction from repairs falling is that the insurance companies are not paying for complete and acceptable repairs. And even, we've talked about safety as a problem, causing shops to shortchange parts and quality of repair. Repair shops don't get adequately paid for their work because insurance companies argue as much as they can, which can result in haphazard, inadequate repairs, as we've already seen, especially from the specialists that have talked here. So I also find it very hard to believe that insurance companies are suffering along with their insured. I think they just want to maintain their profits, and so they start paying less and denying claims. Like Speaker John Walker said, people are kept in the dark with lack of understanding or clarity on why they're paying more in premiums and getting less for their money. I feel, bottom line, the laws in the state of Washington are being stepped on by insurance companies, and the OIC doesn't seem to have the power to enforce these law violations. I was, as a submitter of a complaint to the OIC myself, I was told this by one of the employees that the OIC is doing nothing to regulate and ensure that these companies are not stepping on people and that they can't do anything. But I think it's pretty clear through this workshop that insurance companies do not fear stepping on laws, and they do not fear any fines that may be stemming from the laws that they violate. They seem to be kind of free to defend themselves and free to kind of do what they want. Christian, I don't know how to pronounce his last name, but he was a speaker on here that was representing the insurance companies, made it pretty clear. He picked apart the OIC's data set for these this volume of complaints issue, and basically was completely defending insurance companies solely on the basis of statistics and ambiguity of the way it was evaluated, trying to purposely deflect our attention onto these items rather than to address actual problems people are having, as typical, I think, of a profit-based bias perspective. These problems that we're having are clearly skyrocketing premiums, lack of service, drawn out and complex complaint processes to try to force people to accept low payouts, lack of law enforcement, the fact that people's property is never returned to its original condition is all really the thing that's adding to this complaints problem. I feel like, well, let me just tell you my story. So I have an older car and I was rear-ended by a fully insured person. So I have a third-party claim going on where the liability is clear. The company is liable for all of my time and damages, according to law. I was offered initially through a photo estimate only a few $100s. The estimate I obtained from a local body shop, on the other hand, to try to get a handle on the real value, was over $1,000, almost $1,500, and that was before all this inflation happened. So I'm sure it's worth more than that now. The shop that I went to appeared to factor in parts and paint repair from their actual inspection in order to return my car to its original condition. So that was good. And they actually physically inspected it. So I told the insurance company that their photo estimate seemed flawed. It was just too low. I showed that the estimate that I got from the separate body shop, the independent body shop, and the insurance company completely ignored it. They have tried repeatedly to get me to use their biased services throughout their own body shop, which they wanted to send my car all the way down south, like 80 miles away or something crazy like that. They want me to use the rental cars at a cost of like $20 a day or something dumb, and it was like a compact car, and I really needed my SUV. My car is an SUV, and I used it to haul tools for work, and I told them that. But anyway, so I kind of battled on with them, and they refused to cash me out for the cost that I was willing to settle for. They kept dragging things out, hoping I would let it go. I told them that the body shop that I wanted to use was a private body shop that was, you know, probably a little bit more expensive than the other ones, but they just wouldn't, that body shop that I wanted to have my car worked on just wouldn't do insurance claims because they've gone through this before. They can't provide quality work and do insurance claims because the insurance companies won't work with them. They won't pay for anything. So anyway, I told Geico that, and I said, please just cash me out. This is the amount I'm willing to accept, even if I'm liable for a little bit more. They will, the insurance company would not, like, you know, come back with anything. So anyway, so I issued a complaint with OIC a few months after that frustrating communication. I was misled by the hotline because, anyway, I asked the hotline beforehand if I should even file a complaint for my issue, and was told that the OIC could help me after they kind of reviewed my case. But my experience was kind of just as infuriating throughout the complaints process. The staff with the OIC was consistently late responding and seemed to be undertrained or maybe didn't know the details of my complaint. They received consistently late responses from the insurance company, but they didn't express any concern or press the insurance company to respond. So this kind of has gone on. It's gone on over a year. So anyway, a month ago, the OIC pretty much closed the complaint, citing that they really couldn't do anything and couldn't compel the company to respond or pay. They specified that even if WACs were violated, that they couldn't compel the insurance company to do anything. So I found out basically through my own research that that the insurance company violated at least 3 different WACs, and I cited those numerous times to them, and I'm probably missing more. But since, you know, since I basically didn't have any help to find anything else that they could be violating, and laws don't seem to be enforced, it doesn't seem to matter how many laws are violated. I mean, so if I take the check that the insurance company has issued for that low amount, I'm pretty much certain that they'll limit further liability and close my claim. And I've told the OIC that as well. But they kind of just act like it's no big deal, that I can just hire this lawyer and defend myself. But I'm confused by that because, as we talked about in this forum as well, I mean, what lawyer is going to represent someone with a couple $1,000 property damage claim? It's kind of appalling because I don't know. I mean, this was kind of something I did to help defend myself, and I'm kind of left nowhere, basically. I think Aaron Schulenberg was correct when he talked about customer dissatisfaction, delays, and discontinuities, and insurance companies purposely creating a difficult and delay-filled situation to make consumers kind of give up and take the small amount they're offered. The insurance company that owes me money has had me on the hook for about 1.5 years, and they basically refused to offer me more money, refusing to factor in the estimate I obtained, and refusing to pay for my time. I think they are waiting for me to give up. It's kind of weird that these WACs exist that are supposed to prevent bad faith actions by insurance companies, and yet the OIC, after I filed the complaint over 1 year ago, said that even if the companies have violated these WACs, they pretty much can just do nothing about it, but that I have the right to seek counsel. Again, like, I'm a low-income individual. It would be exceedingly difficult to try to do this by myself and, you know, fight a multi-billion-dollar company. And I'm pretty sure I can't really find a lawyer to represent me for just a couple $1,000 claims. So I think it comes down to Washington State has all these laws for fair insurance practices, but they're not being enforced. You know, the insurance companies kind of know this now, it seems like, and using that knowledge to step on people and kind of do what they want and keep their profits. If laws were enforced, I feel that would eliminate the bulk of complaints, really. So the other thing I'm confused about, though, is the Office of the Insurance Commissioner claims on their website to be consumer advocates protecting insurance consumers. But if they did nothing for me, I'm confused as to what they stand for. I mean, that is their mission statement, right? So it's weird. Through the complaints process, they take your information, all your documentation, but they didn't do anything. I mean, it was stated to me, one of the employees said that you guys can't establish facts surrounding a complaint or a claim, but then why does your complaints process ask for details or clear documentation? I uploaded all my documentation supporting my claim as well as details, and repeatedly requested from my complaint manager to understand why the OIC wouldn't do anything. The complaint process was never made clear, I feel, and I was never given any tools or insights to try to defend myself to the insurance company. I feel I just didn't really receive any help or any service of value from this organization. From my perspective, Aaron Schulenberg is correct in his diagnosis of the issue, saying the OIC needs to step up and see the real problem, to hire actual trained staff to help educate people on their rights and to help individuals defend themselves without going so far as litigation. If we have the laws, they need to be enforced. Right now, the OIC is just telling people to get representation. They simply exist to pass the buck on people. So anyway, that sort of concludes my points. But in general, I think we have laws, they need to be enforced. And honestly, with this whole forum, I'm thankful that it was hosted. And I'm thankful for the ability to be able to speak from my perspective. And it sounds like several people are having, I mean, pretty much the same problems. I just wanted to bring to light that I think it would be more useful if the forum was held during a time when more of the public could communicate their issues. I feel like it wasn't widely advertised enough. I just happened to catch that it was offered and took time out of my busy schedule to attend. So I just wanted to lay that out there as well, that this needs to be better well advertised so that you can see the actual volume of people having issues. Thank you for allowing me to speak.
And thank you very much for your comments. Next, we have Amy Joss. Amy, if you could unmute yourself. Let me know if I mispronounce your last name. Sorry about that.
No, you're good. Hi, so thank you for this opportunity. I am an employee. I'm an estimator at an independent shop up in Snohomish County. And gosh, I mean, it's a little bit refreshing to hear kind of everybody just having the same grievances and issues and knowing that we aren't the only ones, but we have taken a little bit of a different approach to how we handle. We hear all the time customers come in and people saying, hey, we went to this shop and they're not accepting any insurance jobs, or they don't work with any insurance companies. And while we don't have contracts with insurance companies, we do work with them. But we have taken a different approach, unfortunately, which causes the consumer to end up coming out of pocket about probably 80 to 90% of the time. There are very few jobs that they aren't having to walk out of here paying something out of their pocket. When you have insurance companies who are wanting to pay you in the mid to upper $50 an hour range, or low $60 an hour range, and you have technicians who are skilled and expert and been in the the industry for a long time, who are qualified to make at least half of that or more as their hourly rate, you cannot stay in business like that. And we have been in business here for 25 years. right about there. I think Aaron Schulenberg just hit the nail on the head when he said this is, you know, it's not a correct snapshot of what's really going on, because I do think, like several people have said, there has not everybody files a complaint. And the amount of customers that we see who end up having to pay out of pocket, and who we encourage every single one of them to go back to the insurance company and seek reimbursement for what they had to come out of pocket for, because they pay their premiums, or it was an accident of no fault of their own and they're the claimant, but they pay their premiums. They don't get to negotiate with the insurance company what they're going to pay. The insurance company says, this is what we're charging you, this is what you're paying us, or we just won't cover you. And so why does the insurance company get to then turn around and go, well, we're going to hold you to the fire, but you don't get to hold us to the fire? That's a very, I mean, for lack of a better word, in my opinion, it's a bully tactic by the insurance companies. And you have people who've had the same policy for maybe 40 or 50 years. We have those customers who have those long-term policies, who paid in every single month on time their premium, don't have claims on their insurance policies, and then end up having to pay $2,000, $3,000, sometimes $4,000 out of pocket just to get their car back. And while we don't like doing that, we won't stay in business if we charge for what we do. We don't ever charge for something that we don't do, but we charge for what we do, and we expect to get paid for it. And unfortunately, that is having to come out of the consumer's pockets. We do struggle with insurance communication. I've heard more than once from insurance companies, our obligation isn't to communicate with you, it's to communicate with the insured. Well, that's not exactly true, because according to Washington state law, they do have a duty to make a good faith effort to communicate with the chosen repair facility. And so I cite RCWs and I cite WACs and in emails to adjusters and appraisers and estimators and all of it. I fight really hard for the customer to not have to come out of pocket. But unfortunately, it doesn't seem to be getting better. It seems to be getting worse. And one of the things that I love to ask insurance companies is, can you explain to me why the local bicycle repair shop 2 blocks up the road from us charges $100 an hour to repair a bicycle, just a regular pedal bicycle? We aren't even anywhere near that of what we get paid from most insurance companies. And that's to get a vehicle on the road to be safe, so that my family is safe and your family is safe and the people in the car are safe. And it just seems silly that we even have to have that conversation. The things that are just arbitrarily removed from the repair plans. I had a conversation on Friday that just kind of blew my mind. And that was, I was on the phone with an adjuster. No, I'm sorry, it was email with an adjuster from a big insurance company, one of the big ones. And I said, I had sent in a supplement for $8,300. So it brought the job to just over $10,000. They sent back a response to that. And out of that $8,000 supplement I sent, they approved $1,800 of it. And so I emailed back and I said, our repair planner did a full repair plan on this. I need you to go back to the drawing board and do better. And his response to me was, I don't know what a repair planner is. This is the person that works at the insurance company. How do you not know what a repair planner is? How do you not know what a repair plan is? How is it that I can send not an original estimate, not a preliminary estimate, but a full repair plan after teardown with photos for $8,300 and we get back an approval for $1,800? It just doesn't jive. It doesn't make sense. I think they slow. I think insurance companies notoriously slow play the whole process, and in hopes that customers will just get frustrated and cash out. I have it on, we always suspected that these lowball preliminary estimate of records, which come from the insurance companies, were being given just to discourage the consumer from actually doing the repair, and just, okay, this is what they say, so this is what we're going to take. And I had an adjuster or an estimator actually come to the shop a couple of weeks ago, and I said, whoa, your rates are like $37 below what our rates are per hour. And he said, oh, we just do that, and just because most people just will cash out, so why are we going to pay them top dollar to cash out if they're not going to repair their car? And I just wanted to scream, because I just feel like, how is that good faith? How is it good faith to go do something like that? It's not. But again, like so many people have said, who holds them to the fire? Because they don't seem to be getting held to that fire in a way that we are, or the consumer is, or anybody else. And I'm hopeful. I'm cautiously hopeful, cautiously optimistic that this meeting will actually get us somewhere. I'm not naive enough to think that it's going to be overnight, but I do think that having enough people getting dialogue open, maybe some changes can be made to this industry that is so antiquated. I mean, it just is so archaic from so many standpoints, and it doesn't need to be, and people are suffering because of it, and people aren't able to get their cars out of the shop because of it, and people are having to go, well, I guess I'm going to pay to get my car out so that I can go to work, but then I'm not going to be able to pay these bills, and it just isn't fair all the way around. So I'm hopeful that we do our part we really do our part here to mitigate the amount that the customer does have to come out of pocket, while at the same time being able to stay in business. And we also do our part to support that customer in fighting that fight. Even after they leave here, we make ourselves available for three-way conversations with the insurance company. We do encourage every single customer who has to come out of pocket to file a complaint with the commissioner's office, because that is what the commissioner's office is there for, in our opinion. And so we don't just sit back and take their money. Like, we're proactive in helping them, but something has to give. Something's got to give, and people need to be taken care of. And I feel like this is the first step. I'm hopeful that this is the first step in that. So thank you for your time.
Thank you very much for your comments. Up next, Michelle Daines. Michelle, please let me know if I didn't say your name correctly. If you could, go ahead and unmute and provide comments. Thank you.
Hi, I'm Michelle Daines, and I am not only a Washington State insurance consumer, but I'm also a producer in Washington State. I work for an independent broker and have been an insurance agent for over 15 years. And I'm so happy that there's this forum, because this is going to take more than this conversation and a lot of us to come up with a solution. So I'm just kind of saddened by the different people speaking about their claims not being handled properly. And I have had clients in the same boat as you, and I always try to step in to help move that process along. Unfortunately, with COVID, it definitely has made being an insurance agent very challenging. There's a lot of dissatisfied clients, but I think what it comes down to is education. As a couple of other folks pointed out, Scott Hedges was saying he feels insurance adjusters, not only on the home side, but on the auto side, need more education. And I agree with this. I also agree that insurance agents need more education at educating our consumers, because the fact of the matter is an insurance policy is a contract between you and the insurance company to indemnify you after a loss. However, no two insurance contracts are exactly the same. No two insurance carriers will look at that claim the same way because the inside limits are not the same, which really makes it very challenging for a myriad of different reasons. But I think that accountability from the insurance companies need to be had. The insurance commissioner's office needs to step in with these complaints. I've had a couple of clients who have complained about the insurance companies not responding. Luckily, never report against me, but against the insurance companies. And I think that there needs to be a standard in Washington state that all companies are held accountable to, which will hope alleviate some of this, but a lot of it comes down to consumer education. Some folks maybe opt out of personal injury protection. The minimum limits in Washington for auto are very archaic and old school. 25, 50, 10 is not going to pay for very many vehicles or injuries that I know of, because if you only have $25,000 for bodily injury per person, caps out at $50,000 and $10,000 for one car, you're not going to have very much coverage. But thank you so much. And I am happy that actually one of my insureds told me about this forum, because I, like some of the other participants, were unaware of it till the last minute. And I feel there's lots of issues that we need to work through in Washington state for our consumers. Thank you.
Thank you very much for your comments. Up next, we have Alan Singer. Alan, please go ahead and unmute and provide comment. Thank you.
Thank you. This is a wonderful forum, and I echo the comments of the prior presenter who indicated that this is a first step, and this kind of forum should be open. Listening to so many stories today about serious consumer issues and troubled consumers, seems that there's a common theme. I don't want to say lack of enforcement, but I'll say lack of enough enforcement, and also lack of access to justice for people that are seeking it. Having practiced, I've seen the significant power imbalance that insurers hold. There's quite a bit of power that they have and they hold in matters that end up not just pre-litigation, but in litigation. I think that the issue is especially troubling to Commissioner Kreidler, who's always been committed to consumers. And I want to thank him for his years of service to the people of the state of Washington, and standing out as a tremendous example of how insurance regulation should occur. He's always listened to everybody, and I really appreciated that. I think that there are two possible solutions that we can look at in helping people get access to justice and seeing enforcement. One is more resources to the insurance commissioner's office, but given the kind of fighting that needs to take place to keep money from getting diverted away from OIC into the general fund, seems to be a problem that occurs probably still frequently from when I knew about it. But that not being likely, there's another thing that's crossed my mind that maybe it's time to consider that other states are doing. That's making people a sort of a private attorney general, giving a private cause of action to enforce the law. Now, we've seen this in the news lately in Texas, where if you think that a doctor is helping provide abortion, you can sue them and you can obtain recovery, and you have an incentivized recovery mechanism. Damages, attorney's fees, makes it very likely that somebody's going to take those cases. Governor Newsom in California was discussing this with gun enforcement or weapons enforcement, trying to create a tool so that people can get access to justice more easily. Maybe that's something to consider here. We don't have the ability to create millions of dollars to give to OIC to hire more staff to do more enforcement. But maybe we have the wherewithal to provide the long list of comments of people frustrated not being able to find justice to the legislature and saying it's time. We can't keep feeding a regulatory authority. Maybe it's time to empower attorneys to be able to take on these cases. It's frustrating to hear so many of these cases and to be so busy that I can't help all these people myself as an attorney, but I know lots of attorneys share that feeling, but it's true. When you have a dispute over just a few $1,000s a year and it's having a significant impact on people, they're just not getting access to justice. So maybe the idea of empowering people with a private cause of action with award of attorney's fees to compensate the attorney for their time, that the consumer doesn't have to, will incentivize insurers to follow the rules. Anyhow, thank you for your time. I really appreciate it.
And thank you very much for your comment. That looks like everybody wanting to provide comment today. Just a reminder, we are accepting written comment through August 15th at policy@oic.wa.gov. Let me say that again. I kind of messed that up. Email address is policy@oic.wa.gov. And we would like to thank all of our speakers today for their time, and especially all of the folks willing to share their experiences with us. You've provided valuable information to consider. A recording of this workshop will be made public on our website. Thank you again. This public workshop is now closed.